What if I told you you could get a copy of the Edge Finder completely free thanks to this live stream's sponsor, 8cap? 8cap is a regulated brokerage that has a special offer for viewers of our channel here, and I wanted to tell you a little bit about how this offer works. There's really only 3 simple steps to setting up a free copy of Edge Finder through our partnered broker, 8cap. Step 1 is you have to use the link being dropped in the live stream chat or down below in the description to create a new account. Step 2 is go to this link, scroll down on it, and you'll see the requirements that you must make in order for 8cap to essentially buy a copy of the Edge Finder on your behalf. Once you've created an account and deposited the required amount of money in order to qualify for one of the offers on that page, step 3 is to simply contact 8cap and or A1 Trading's team. On that page, there will be information for that. And then we will be able to essentially grant you access to our tools completely free, bought and paid for by your new brokerage, 8cap. Unfortunately, 8cap does not accept US traders. However, if you're outside of the US and interested in exploring this offer in more detail, again, like I said, we'll have that link in the live stream chat or in the description down below. Alternatively, you can just head over to a1trading.com/8cap. Thanks to 8cap for sponsoring today's show. Now back to the content.
Good morning, everybody. Welcome back to another live stream. Happy Thursday to you. Today we've got kind of an action-packed morning in the sense that we have our producer price index numbers. We have the stock market showing a little bit of strength here this morning. We have unemployment claims as well. Busy morning to say the least. The Iranians, little update here. We warn against any ships leaving. More headline drama in regards to the Middle East. It does seem like things have kind of resumed, if you will, over there, and not in a positive way. So we will continue to see how that impacts markets. But I do think that this move, this latest move here, is largely due to the combination of geopolitics coming back into the picture at a sensitive time, in the sense that we have the SpaceX IPO, inflation reports, all of this coming together at the same time. I think that there are a lot of investors, traders who are kind of like, let me take some chips off the table. And that's part of the reason I think you're seeing a sell here. I don't necessarily think personally that this is the type of sell-off that persists long into the future. I would love to see it, by the way. I'm not, I would actually love to see the Nasdaq, S&P 500 down 10, 15%. I think it would produce a really great buying opportunity because we've talked about this on the channel a lot recently. But I'll show you guys, I've got this tool within Stockbox that I'm pretty excited about. Really simple tool that we are working on. But it is a earnings scanner here, earnings strength heat map. So it tracks a bunch of stocks and which ones of these companies are showing mixed earnings and revenues, double beats, double misses, etc. And generally what we can see is that in terms of earnings per share beats, we have most of the stocks that we track within Stockbox producing a really strong overall beat. So the market is seeing strong earnings, and yet you also have a little bit of worries coming into the market again due to the Iranian conflict kind of being ongoing, right? The market didn't care about it for a while because there was a ceasefire, because it looked like maybe there would be some kind of deal and that oil would be kept under control. Now, why is this move not much larger? Well, Trump said something yesterday, talked about how they are releasing a certain number of barrels from somewhere. I don't know if it's like Venezuela or something. They're essentially producing as much oil as possible to try and counteract the supply difficulties that we're currently dealing with. Dollar index holding strong here. Price action still looks constructive. Someone pointing out the pound dollar is tanking here. We'll take a look at pound dollar in just a second. I still am short, and we will have to see if that short sticks. King of Kings, my friend, thank you very much for the donation. Can't wait for this. Can't wait until this weekend to dig through the fundamentals course. The Edge Finder has so many features, and I haven't touched 10% of them yet. But fundamentals really do run the market. I see now. Thank you very much for the donation. Again, as always, cheers to you. Coffee fund at the A1 Trading office will thank you all. I say this every time, but donations that come into this stream, all donations go towards coffee at our office. But and we need it, man. We make a lot of content. We do a lot of production behind the scenes to make this stuff possible. So thank you very much. I appreciate that. I'm still sticking with the dollar long position. I am still short pound dollar. At least I believe I am. Yeah, I'm still short pound dollar. Excuse me. Pound dollar looks okay. I've taken the first half of my position off. I'm looking for the second half to follow through to the downside. If that can take place, that would be fantastic. If it doesn't, then I will stop out in the second half. If we look at silver here today, I'm still in the silver campaign trade. This thing has been a crazy runner. It's been a little bit since I've had a trade, probably a couple of months since I've had a trade like this. And that's not out of the ordinary, by the way. Like for my trading, I can go weeks on end without having a move like this. And then this one type of move kind of makes up for all of it. So silver continues to show a lot of resiliency, a momentum to the downside chart. And the precious metals, man, they have been a really wonderful short this year, following the big run up. Now, I'm telling you that, going into this year, I was very bullish on precious metals and even long in January. However, conditions have changed. We have covered this many times on the show. We've talked about this extensively, but the scenario on the macro front for gold has dramatically changed. Yesterday, guys, we lost the 200-day moving average. Well, actually not yesterday, excuse me, like a couple days ago. We lost the 200-day moving average. We have not been below the 200-day moving average in years for the gold market. You are looking at a move not seen since October of 2023. Gold has been on a phenomenal run. It has been a monster trade, and congrats to everybody who caught that runner. Gold has produced some fantastic gains, but all good things in markets come to an end. Like the trend doesn't last forever. Now it looks like you have a downtrend in gold and silver. Now, I've said this every time because I get some angry comments from the precious metals crowd, which feels like betrayal because I am in the precious metals crowd for the long term. Like I like gold and silver long term. Short term, though, I don't like them. I think that they continue to look bearish. Like in the short term. Long term, I think there's some opportunities to dollar cost average and build a position on precious metals. But in the short term, the macro has been clear on this one. This one has been one of the more obvious setups in recent times. Now, I know I sound like I'm gaslighting you if you're like, well, I haven't caught the short, so it's not so obvious to me. But if you are a student of macro fundamentals, if you watch what's going on in inflation, if you understand how economic growth metrics and jobs market statistics have been coming in, then you may not have been so blindsided by this move down in precious metals. The dollar looks really strong, like really, really strong. Nick, drink water. Thank you. The dollar looks so strong, though, because you've had economic metrics that are upbeat right now. The manufacturing and services PMIs, which are forward-looking indicators of the economy, have been beating estimates pretty handily. Consumer confidence, which has been in the gutter, is at least trying to climb and is climbing at a faster pace than expected. So consumers, I know, every time I talk about these data points, there will be a comment later that says, "Nick, how dare you say the economy is good? It's hard out here." I know it's hard out there. I'm not trying to downplay that. What I'm saying is that from a trader's perspective, it is about how the data is looking versus what people expected it to be, not the absolute state of the data. For traders, for investors, you probably want to look more on the absolute basis, like the absolute level of consumer confidence. But what do I mean? Well, consumer confidence was expected to come in at 91.9. It came in at 93.1. better than what it was expected. If I told you it was going to rain all day, but instead it only rained for 2 hours, that's better than expected. You see what I'm saying? So inflation is the topic of today. Yesterday, we had the consumer price index. Today, we have the producer price index. Sorry, I've got to clear my throat here. I just had breakfast and coffee, so bear with me. And I woke up kind of later than usual today. It was one of those days where I just kept falling back asleep, which is just, yeah. Anyways, we're here now. Dollar, again, to me, continues to look strong. If I am looking at the jobs market data, it has been upbeat versus expectations. The non-farm payroll came in strong. ADP numbers came in strong. JOLTS job openings came in strong. The weekly jobless claims today, we'll see what those bring. They're expecting 225K, I believe. Let me just check. Again, we've got 4 minutes to go. And hello, 4 minutes to go right before the inflation print. Trump says that the United States will be hitting Iran very hard tonight. We will assume total control of their oil markets, much like we have with Venezuela. Well, there you go. What's the markets doing in response to that? Well, Nasdaq, S&P a little bit softer here, but just moments before we get into the inflation report. Excuse me, guys. I'm sorry. Coughing this morning. I'm not sick. I think it was just my coffee. Anyways, yeah, more geopolitical headlines. No surprises there. This has been a market that actually Trump said in an interview yesterday. He said he was touting the list of milestones that the stock market had made, and said now he's going to have to let it come down so that they can deal with Iran. I'm paraphrasing, but I heard that and I was like, man, okay, so he knows what they're about to do might not be popular in the stock market world, but he sort of was touting, I think he noted like 50,000 on the Dow Jones. We've heard him say that quite a bit. 7,000 on the S&P 500. So kind of touting those as we've hit those milestones. We're going to have to come back to those. He also pointed out that, the idea was we weren't going to see those kinds of numbers for years. The Trump rhetoric. He was kind of hyping up his achievements on the stock market side of things, probably in anticipation for what has come out here today, confirming that there will be probably more stuff going down in the Middle East. So we've got 2 minutes to go here, guys. Actually, just 1 minute to go before we get the producer price index. Please understand this number last time was more impactful than the consumer price index because it shocked market expectations. Last time we had a sharp upward surprise of 1.1%. We're going to monitor that here and see what it brings this morning. What I'm going to do here is I'm going to FX Street just to get another calendar open as well. Let's go economic calendar here. And there we go. We've got producer price index year over year. That's what I'd like to see. Okay. Number should drop any second now. We've got about 30 seconds to go. Guys, if you're enjoying the stream, if you like the commentary, don't go anywhere because after the number drops, that's where things get interesting. That's where we can actually take a look at some markets and talk about trading setups that this produces out of the producer price index number. Coming in 20 seconds. Like I said, smash that thumbs up button. Follow if you're on Twitter. We've got, how many people on Twitter? We got like 70 people watching on Twitter, mostly on YouTube here, between the two YouTube channels. So anyways, 5 seconds to go here. Let's see if it does anything further to this, this already jittery market one way or the other. All right. No initial huge spikes. Nasdaq, S&P, both already kind of moving lower beforehand. Silver is moving lower. Dollar looks relatively firm. That kind of looks like an as expected type number. Yeah, okay, so we had producer price index actually a little warm. Little bit lukewarm here at 6.5% year on year. Looking at core, though, core came in a little bit light. So softer than expected on core producer price index and higher than expected on year overall producer price index. Remember, core removes food and energy. So what this is telling you is that probably the energy component, which is all eyes right now due to the Iran stuff, energy seemingly produced a big chunk of the inflation jump here today. We also see the 4.9%. That may be a positive in the sense that it might not be making its way so fast into other areas of the economy. Jobless claims jumped to 229K versus 219 expected. So a little bit of softness in jobs here this morning, a little bit of mixed data on the producer price index. That's what I would give that. Because again, the producer price index did come in higher than expected, but the producer price index core reading, which removes food and energy, which is important, right? We don't want to see inflation carrying over into everyday goods as much. That number came in a little lower than expected. So dollar index's response is neutral, kind of back and forth. However, we also saw geopolitical headlines like 4 minutes before the news dropped. So please, understand like that's going to look a little confusing. But yes, inflation, I would say mixed here in terms of how this reads, just because the month over month readings came in lower than expected for core, and for core, we also had year over year readings that came in light. So it was a light print on the core side and a higher than expected print on the headline side. So I would argue that is pretty mixed. Dollar index slightly higher. We also, again, are seeing geopolitical headlines hit at the same time. I just read that out, but basically Trump announcing willingness to hit Iran tonight. So we are back on that story. Most offensive capabilities are gone at this. Let's see. At some point in the not too distant future, we'll be taking Karg Island and other oil infrastructure points and assume total control of their oil and gas markets, much like we have with Venezuela. So definitely interesting. Definitely interesting. So markets in response, let's just see what the updated views are. We have stocks were much higher. We're up like almost 2% on the day for NAS, giving back a little bit of gains here. Again, this is a little confusing due to the timing, but I'm going to chalk up producer price index to mixed to maybe just very slightly softer than expected, but really pretty mixed there. What seems to be driving markets this morning continues to be the same story as every morning recently, which is Trump tweets and what Iran is saying. So we are going to keep an eye on that because that seems to be the bigger market mover. So just a quick view. Here's the 30-minute time chart. You can see, or time chart. We can see 30-minute chart moving lower here for NAS and S&P 500. And this has been the theme, man. Like the last few days, I have to say, and we're going to bring Chris Pulver into the conversation. He's here to also take a look at this market with me. The last few days, we have seen something we don't usually see, which is, if you've been in this monotonous, never-ending uptrend, watching NAS or NQ, the Qs, Nasdaq, whatever, the theme has been any sort of weakness is faded and pushed back on up by the end of the day. Whereas we have only just recently in the last couple days with this sell-off starting, you are seeing the opposite. And it is more of a rare circumstance to get that dynamic. But I can remember during 2022 being kind of the most prominent bear market that I can think of this example. You would get these pops and they would be violent and sudden and fast, like big up day moves that would actually get faded very, very sharply. And that to me is evidenced, if that can stay the case for a while, if we're continuing to see flushes through the lows, more evidence of bears are in the room and in full control. So taking over of rallies to the downside, that is more of a bearish price action type chart. And it seems right now to be the type of market we're in. Hey, Chris, how's it going, man?
Good morning. How are we doing, man?
It's putting up a little bit of a fight here for once.
Well, it was, I mean, it doesn't really change the structure we've seen the last week, though. This is probably the cleanest chart I can find as far as what's the price action been telling us? High to low, pullback, lower high to lower low pullback, lower high to lower low pullback. Same thing last night. I mean, even though the news, I was coming in this morning at a 0.7% rally on the S&P, so SPX 500, and we've given back more than half of that. So 0.7% to the upside, now 0.26. You know, the ranges have gotten wider. The expected moves for the day gotten wider. VIX is around 22. I mean, to me, the bulls have to get out here. If the bulls are going to step back in charge, I think they have to get above 73.60 today. So 7360 would put the bulls in a little bit more control intraday. And if the bulls can take out this high and get into this trend line area, I think that's an encouraging spot for at least the market to put in the fight. Right now, it's not much. It's a rally into the bears to possibly sell it. I think symmetry is still a target. I think the measure move around 70.70 is still a target. Bears right now, Nick, in my opinion, have control until this trend line breaks. That's what I'm looking at.
Yeah, I think that makes sense. And VIX at VIX at 21, 22. I personally still think that's kind of low, Chris. Like for what it
is, man,
could be. Like I think you could see it pop up into the 30s.
I was actually talking about that yesterday. I think that I mean, looking at some of these intraday swings, I mean, let's look. The VIX was at I mean, we went from a 16, 17 VIX to 21, 22. We had a 3+% sell-off. The move on Tuesday, by the way, that much movement intraday was one of the largest in 15 years. Or no, sorry, even more so. It was the 15th largest ever as far as like how much price actually moved up and down. We were up 1%, down 3%, up 2%. That type of intraday price action in the S&P was like the 15th largest day intraday as far as movement, which is nuts, man. And the VIX was at 21.
Yeah, and what's interesting about that is when that happens on the downside, Chris, like let's say we've been selling off, like right around the bottom of like the 2008s, right around the, like in my data of all my studies and stuff, what I found is like those wildly like stupid volatile days typically occurred towards the bottom of the market. The question is on the top, does it carry some similar significance? Like, do you start to see a wild, kind of topping back and forth movement? That's a curious question to look into is, do you have like big chops, big moves at the top of a big rally? Does that have some kind of average, kind of next 6-month type of move that is more downward speaking? So I don't know. Very interesting.
Well, I mean, there's still, look, for the most part, it's still a bull market structure. I mean, where I start to question bull markets truly would be if this is the daily chart SPX, if we take out the 200-day or we get below the 200-day enough so that when we come back up to it, that's the kiss of death. That's where I start to question like the bull market's, ability to hold. If we are just coming back in, I mean, right now we've had, I think, peak to trough about 5.2% on SPX 500. So it's, I mean, in the context of a 20% rally, a 5% correction, that is somewhat, yes, volatile, but orderly. Lower highs, lower lows, lower highs, lower lows. It doesn't seem like it's just, it's not necessarily bear flag. Like that'd be the structure I wouldn't want to see. The fact that we're down and then pulling back and then down again, and then pulling back, like I said, orderly is what it feels like right now. But if we break 6,800, let's say we go like down to like 6,600 or 6,550 or so. If we pull back to that 200-day and it rejects, that's where I'm way more concerned that we're flushing down to find that level. And all of a sudden, all the good stuff that's been priced in, the market is clearly switching over. But as I mentioned before, it's like this could just be a big broadening pattern and just be head spinning volatility. And at the end of the day, this might be a massive distribution pattern and very volatile. But I mean, risk management is going to be the crazy thing because you could have false breakouts to the downside, the market's ability to kitchen sink it all the way back to highs. I mean, I feel like we're in the fog of war again, all over again. It's like the market didn't care about it. Now it does. And it's like, well, what do we have? I guess it's bad news. Rotation is happening. We've got more like lingering Iran stuff and it's not going away. And it just seems to be escalating a little bit, which is probably not making the market super stoked about it.
Chris,
oil wise,
real
sticky,
quick thought while we're talking on the indices pullback. let's say it does continue to pull back. Let's say we do make our way down to the 100 and 200-day moving average. What types
Okay.
of things, we always talk about this, is like having your shopping list ready if you are going to buy something.
Okay.
What kinds of things are you looking at? Like what sectors or individual stocks or basket, like which index? Like, I think it's a good conversation to have. We do have the markets potentially pulling back here. What are you watching?
So give me a level again. Let's say Nasdaq or S&P is what? What's
S&P
our
pulls back
pullback?
to 7,000, let's say.
7,000. Okay. Well, 7,000 index wise, I'm certainly participating in the index. I'll be doing, more naked puts or cash secured puts or ratio spreads on SPY, probably on Qs, probably on diamonds, probably on Russell. I'll probably throw some like out of the money stuff where I'm going to try to play these March lows. I did a trade. I posted this for the alerts yesterday. I went out to Liberation Day lows, Nick. And here's why. I didn't think it was a terrible trade because the IV rank right now, this is one of the highest I've seen. I think a lot of this is due to SpaceX. But Qs right now, if you look at the IV rank, 93.3, that is almost double the S&P. So the tail risk positively and negatively on the Nasdaq is as high as I've ever seen it. I mean, just put this in context. SPX is at 61. That's very, very high. This IV rank is normally like 15, normally 15 to 20. So 61 is huge. And it's like, I am typically for like establishing positions, going shopping, like you said, I'm selling premium. So for the Nasdaq to be at 93, look, we might have a wild and crazy swing on Nasdaq, but this is the trade I posted yesterday for Pulver Alerts. I'm doing a 450 by 410. It's a ratio spread, which means I'm buying the 450 put with one contract, which is right here. I'm selling two at the 410, which is going to act like a profit trap in addition to a cash secured put at the 410 strike. So if I was going to take any assignment on the Nasdaq, my discount is 45% from all-time highs. So look, we might have this like horrendous sell-off in the market, but I would gladly own some Nasdaq at 45% off. Even if it sells off 60, 70%, I'm going to hang on to it. But the odds of assignment here is about 1%. The probability of profit's about 99%. I'm in this for a couple $1,000s of income, hopefully. I'm going to hold it to the end of the year. I think the market's just going to be turbulent, volatile, and ugly, but not necessarily break Liberation Day lows from 2025, which is, March and April lows of 2025.
Sure.
So I thought finding that is a pretty good setup. What am I buying if the market pulls back to 7,000? Probably more indexes. And honestly, the rotation for me is I'm going to be a little bit more defensive. As much as I want to say, this seems like a good opportunity to get into, said chip stocks, said computing stocks, all the high flyers. It's like, I don't know if I'm that interested, honestly. Maybe selling some premium on Micron, maybe a Marvell, maybe Mag 7 if they look good enough, but I want to go out of the money. But I'm honestly buying some boring stuff. I bought shares this week of XOM, CVX for energy. I bought some Coca-Cola. I bought some Altria. I bought some Walmart. I bought some Costco. Like, I'm dabbling in more of like the defensive space right
boring.
now.
That's the boring.
I am
crap,
going
though.
boring
like
because there's dividends and there's lower beta, and I don't want the correlation risk. And I think if you want non-correlated, you got to go energy. So energy to me is like, if you don't want to worry about the drama of the S&P or the Nasdaq, then go energy.
Agreed. I mean, energy is it's the lowest correlated sector to the S&P 500. So that's definitely an attractive spot if you do have the concern that you may get some volatility in the overall index. So producer price index this morning, just updates in terms of overall inflation readings this week, kind of putting a lid on that. We had mixed producer price index and kind of on target consumer price index. So inflation this week showed continued rise overall. Like we know, I'm just going to give a visual here for our conversation about this. We continue to see inflation on the rise. It is rising kind of in line with expectations. So no major blowout inflation reports this week, as people had kind of been worried about, myself included. I was thinking we might see a repeat of that higher than anticipated producer price index blowout that we saw last time around. Not so much. We saw inflation is rising, but it is rising to a degree in an orderly fashion, as weird as that is to say, due to the Iran conflict. That certainly is the catalyst. We know the energy-based inflation is a big component of that. And so the question now becomes, well, okay, we've seen inflation do this. And throughout this period of time, we have heard ceasefire, into the war, etc. My concern here is that we are now 3 months into rising inflation, and there is no signs now. We are truly back to like a square one type of dynamic of no deal, and we are back to talking about bombing Iran. So you have this situation where, okay, what's inflation going to do? I was looking at Fed probabilities, Chris. We're looking at pretty much a hike. Like we are now talking hike is coming for the Federal Reserve. And that is a total 180 from where we were going into 2026. So, do I have my concerns? I do, because here's the thing. We've already seen narrowness in the market. It's really been the semiconductor AI excitement. But to me, there is that concern that if this inflation continues to run hot, we saw this in 2021, where inflation was rising for a while and the market kept going until one day it kind of gave out and it said, no, inflation is going to hurt because inflation is going to mean rate hikes. And a lot of these capital intensive, I mean, we're already talking about where's the money coming from for SpaceX. We already have, tightening on monetary policy being thrown into the mix, especially with the circular financing that we have. Like, to me, it's not to say that the Nasdaq simply cannot go higher. It can defy gravity as long as it wants. My perspective, though, is that the risk reward for buying tech and buying kind of riskier stuff that can move quite a bit only really becomes more attractive if we do see that pullback. So I kind of am with you with the idea of like, what am I buying if it does pull back further? Probably stuff that is more hard asset, probably a little bit more middle ground. I wouldn't say full-blown defensive, but I would definitely kind of not be just a fan of just buying, high PE ratio tech stuff. So I think semiconductors are a great buy if you see a very sharp drop in markets. I believe in the technology. I just think that you need that discount to account for, look, we're dealing with rising inflation and who knows where that stops. Like, this thing's rising quickly. We went from 2.4 to 4.2 real quick, and that can go up to 8. So, it's possible that it keeps going, right?
Yeah. And I mean, the speed of everything this year, that would not be a huge surprise. All of a sudden, see just headline CPI get to 4.5, get to 4.7, get to 5% in the next, month or two. Remember too, I think it was 10 of the last 13 Fed shares have all been tested with like a 10% pullback in the market. Kevin Warsh makes his debut, I think, next week for FOMC, right? Is that right? Next week, FOMC is Wednesday.
I believe that's right.
That's going to be his first test and press conference, if I'm not mistaken. And then we have PC at the end of the month. I mean, you were right. The probability of a rate hike is quite high, and now it's like by the end of the year, we're looking at almost a 50% chance there's going to be at least 25 basis points of increase. The market right now, I guess, the market's forecasting like about 30 basis points. It's so stupid that it's like the market's projecting 30 basis points. It's like, well, the Fed's never going to raise 30 basis points. It's going to be 25, right? It's like it's 25 here. It's 25. They've got the window 25 basis points, but the pause is still what probably Warsh and the gang's hanging on to now. The likelihood of a cut is, I think, no way that's going to happen. The entire central bank landscape right now is raising rates. The ECB just raised rates this morning, if I'm not mistaken, by 25 basis points. And I mean, Aussie's been raising rates. All of them, I think I shared that in our Discord. Every central bank by the end of 2026 expecting at least 25 to 50 basis points of hikes. That includes the Bank of Japan. That even includes maybe the Swiss coming off of 0% again. I hope it doesn't, because I'd love to see that positive swap trade. But 25 basis points being one of the last banks to do it. But does the market want to continue to test a new Fed share? It would go right in line with what's happened historically for all these other Fed shares to be tested with a pretty sizable correction. I mean, 10% might seem muted after a 30% rally in the Nasdaq or a 20% rally in the S&P. But a 10% pullback right now with all the leverage out there is not going to feel good. I mean, hell, man, a 5% pullback feels like crap right now. Because it's like, how does it happen? A 3% sell-off intraday is how it happens. It's like, it's the market moving so fast to the downside. Just, it sucks to, like, I mean, this is like when I'm not live 6 hours a day, it's like, I'm having these conversations like, is this like when you have to go into like defense mode, it really does feel like, here we go. Like, I mean, it brings me back to like manage your risk in 2022? And do I need to like really look defensive and make sure that whatever happens, it's like making money in the markets on the upside is generally pretty straightforward, but it's not losing it when shit's going wrong and stuff's going against you. It's like, it's just making sure that you're not getting just beat up and trashed by the markets, like just refusal to go higher. Because when everything starts to go down, correlation is 1. And it's 1 to the downside. So right now, gold is down and silver's down. The indexes are pulling back. And it just seems like, where do you hide right now? And like I said, non-correlated is hide into energy. But that doesn't mean we don't have volatility there either. You know, and it used to be hide out in value. It's like, well, value's been a trashy play for 2 decades. So it's hard to say like where to go outside of cash and have dry powder. And that's honestly like the best place to be, which is, wait for discounts and then sell a bunch of premium further out of the money and hope that's safe income. Take ownership at a huge discount because you're getting a much better value. And just don't get burned on. I mean, at this point, it's like, I'm just not trying to chase, but I don't think the bull market is done and over with. I think there's still plenty of structure, but I have my concerns of, where we could be breaking that structure is around 6,800. I mean, again, notice how we had all that indecision for 3, 4, 5 months going into the start of the year. 6,800 held really nicely until it didn't. So if we break 6,800, I feel like that 200 moving average could be break, retest, and fail, and then we're off and running, like maybe down to retest the March lows. But like I said, I'm hoping that's not the case for 2026, because what was the point of that rally? The point of that rally was what? To be the squeeze to set you up for a bigger fall. And the markets manipulate like that, but it's just like that's really not an exciting trade to be like, oh, here we go, Nick, get ready for a 20, 30, 40% correction in the markets. Sure. I'm not there mentally yet, so I'm just thinking there's hopefully a save in the market with whatever, dude. Get the fudge out of Iran right now and lock that up and conclude that and see where the markets want to take it, because the fact that we rallied during that conflict, I mean, somebody asked me like, well, where would we be without Iran? It's like, well, it wouldn't have been the 10% dip and the 20% rally. It probably would have been more of the market this year doing this. What do you think? If we had no Iran, do you think the market would just be doing this to the
Probably
upside and then back just slower?
Because I think the market's just like, there's a lot of geopolitical noise, but in the background, I think it's just earnings around AI. That's just, it's the story that has continued to deliver. It's where the growth is at. I think the index is just continuously tilting more and more heavily in favor of tech stocks. And I think that is a risk, but also it's kind of like the pros and cons of having a super concentrated portfolio. Right now, the market itself is a concentrated portfolio of tech stocks, and it's reaping the benefits in the upside. And to your point about very large, quick one-day drops that we can experience, that is the downside of a concentrated portfolio. Like if your whole portfolio is 3 stocks and and even just one of your stocks is down a lot, you have a really bad day. But if just, if your stocks are up, you have a phenomenal day. Same thing with like the broader market that I think is a real risk, is like you have these types of moves where tech significantly, to an extreme degree, outperforms everything else. What does that mean? Well, the index gets tilted heavier in favor of tech, and it keeps doing that and doing that and doing that. Eventually, the index is going to be so tech heavy that when tech has a true normal kind of reset, it will likely be painful for the broader index. So we'll see where that goes. Nasdaq again holding on to some gains here this morning. Inflation being a little bit mixed. Dollar index, I wanted to talk about this chart. Dollar index for me, Chris, you asked like where's the play right now? For me, it continues to be dollar bullishness in the here and now. I do think that this chart looks really constructive. You have, look at these kind of every day, you're getting this similar pattern where dollar tries to move lower, buyers step up. We had the huge breakout here above consolidation. To me, dollar index is sort of just catching up to the idea that the Fed is not going to cut rates, the Fed, at least for now. Now that can change, and we keep an open mind on this show. We're never kind of speaking in absolutes. But as of now, looking ahead, there's no chances of Fed rate cuts anymore. And so the market is thinking, okay, well, that sends the dollar higher, because, if we're going to see higher rates or we're going to see rates stay the same, there's opportunity cost to you could sit in cash, savings, CDs, get paid something to wait for lower prices. And
Yeah.
I think that that's kind of what's happening with the dollars. You have this geopolitical tension that continues to drive the dollar higher, as well as a list of macro that we have been covering that has been pretty favorable to the US dollar as of late. So we're talking better than expected jobs report numbers, inflation that is kind of sticky here. We have PMIs that came in better than expected, consumer confidence slightly beat. I'm not necessarily saying that the US economy is in stellar conditions, because we're not talking just about actual. What I'm specifically talking about here is versus forecasts. Actual data has been coming in better than expected. So for the time being, I see, and really going back since May 15th, when we first got this kind of +5 or greater bullish reading on Edgefinder for dollar, I continue to think dollar has some room to climb. And, the longer this geopolitical stuff goes on and keeps the gas pedal on inflation, I think the dollar index is still, for now, destined to see 102. Now, of course, I can change my mind at any point, and I think that's an important thing about being a trader that wants to be in lockstep with the market, is not tying your beliefs and speaking, it has to go to 102. But I think right now, that's where it likely wants to head. And we'll see as time goes on if that can happen. But, that's really not that big of a move, Chris, like given that we've had some insane dollar swings. It's really been the last year where we went quiet on the dollar index. But
currencies have been quiet, man, for the most part.
Here's another popular chart in currency land right now. Here's the dollar index on a monthly chart. I've seen this one float around quite a bit.
Kathy Wood's got that one. That's her chart. It's like, we're still sitting at major support. And look, how many months is that for range bound dollar? I mean, and it could still go further sideways, because I think there's heavy manipulation in currencies where it's like we just have suppressed volatility in currencies, which is, I mean, I guess it's one thing that makes me nervous. Like if the VIX has a spike to 30, 35, or 40, like let's say we have a truly VIX event, does that do anything to like rattle the currency markets where, you see some big safe haven swings like a dollar, like a yen, like a Swiss, because it's been for the most part pretty contained. Our daily averages in currencies are pretty quiet still, outside of a couple of pockets of big moves. But yeah, dollar, what do you think? Are you mostly, I mean, I know you're bullish. I am too. I actually am short euro dollar. I think dollar index measurement wise for me goes to 102.70. I see back in, this would have been March 2025, pretty big pocket back to like 104, 104.50. So if we get a breakout above 101, I'm going to try to hang on to that with trailing stop losses up towards like 104 plus.
Yeah. I mean, to me, it's like, it's just for now, that's the trade that I see. People ask me all the time, like, Nick, where's your target on certain trades? And Chris, I love giving this answer. I never have targets. I never actually have hardcore targets. I just go with the direction that it's currently going, as long as the macro for me, with my systematic kind of checklist, as long as I have that, like the dollar index could go to 110. It could go to, as long as the data continues to support the directional bias. Now, of course, I understand also like there's measured moves, there's general levels of resistance and support. I'm not ignoring those things. I'm just pointing out, like, I never say never in terms of like how far could something run if it really wants to. I mean, if you had asked me to make a prediction about where semiconductors would go, had we seen a rally continuation, I would not have given you up to 644 on the SMH. Like, this thing has been unbelievable. And sometimes that same with gold, right? We've talked many times where charts can just break and go in one direction for much longer than anyone thinks. Even this gold and silver, I mean, I guess we could just briefly talk about this because I know you gotta head off. So just last conversation on gold and silver. Chris, I'm getting pretty close to wanting to start pulling the trigger on building some positioning here on gold long term.
There you go. Come to the dark side.
Let's go. I'm joining back. 4,000 an ounce might be in the near future. We'll see.
Yeah. I mean, it's a nice round number. I actually have a measure move around 3,800, and even down to about 3,450. I mean, I'm thinking we don't necessarily get there, but selling puts and having some I take it if it gets there type trades in addition to dollar cost averaging. It's kind of the nice thing is, as annoyed as you and I both were of like, I cannot believe this thing hasn't turned yet. And then we had like that fateful granny indicator, which was, everyone in the world is talking about silver and gold. It's like, that was the top. So the fact that we've had a big correction and all the excitement and mania has been kind of drained out of it. I mean, a 27% correction, while central banks still maintain a pretty strong bid and they're increasing purchases all over again. To me, that's at least like, yeah, I mean, what's funny is how the narrative shifts of like oil in Iran, higher inflation, bad for gold. I'm like, is it? Is it? How about printing money to oblivion and having, hundreds of trillions of dollars in debt across the world? How about that is good for gold? But it's like, nobody talks about that right now. It's like, I
Chris,
just think there's one bet. The whole world's going to keep printing money and try to look, this, we talked about this. I want to say our big session we did last fall. I mentioned like paradigm A, paradigm B, paradigm C, paradigm D. So paradigm A was, I don't even remember him now. It was so long ago. Paradigm B was cutting like Doge and drain the swamp and austerity essentially was paradigm B. Paradigm C is pivoting from that cut Doge austerity to grow and run the economy hot, grow your way out of the debt type thing. But paradigm D is when you can no longer grow, you try to keep stimulating at the tops. And that's where I'm thinking like gold ultimately becomes like the best trade, in the land, which is you can't keep printing into oblivion. And it's like the markets. So, I mean, a gold is still like a store of value. I feel like this, and this is like the big dark secret of the markets. Like, do we have just a massive fiscal reset somewhere in the near future that could be like a secular bear market, could be a capex bubble, could be something that's just like terrible news is hitting so hard. And we're talking major, like fourth turning macro stuff. It's like, I think we need to be prepared and realistic that in the next probably 3 to 5 years, you and I are having these conversations and this market is down 20 to 30, 40, 50%. Even though the world can't afford a recession, I think something ugly is probably coming in the next 5 years or 10 years or something ridiculous like that. So we'll figure it out, but it's not going to be fun.
Yeah. Chris, we're out of time. Thanks for the conversation as always. Good stuff. And we will see you on the next one, man.
All right. Thanks, everybody. See you, Nick.
See you, Chris. Yeah, real good stuff. And again, I could keep talking to Chris for hours on all sorts of subjects. But last thought on gold, he made a point about oil, shocks currently being bearish for gold, which is kind of a weird one. It does make sense to me in the sense that like monetary policy is going to see a response. However, to Chris's point that I think is valid, longer term, all this craziness, all this war stuff, if it does in some way hurt the economy meaningfully, what does that do? Well, it actually could spur the Fed to have to do some sort of dovish response to help in a circumstance in which jobs start to get lost and the economy hurts. We don't necessarily have short-term vision of that. So that's why I think in the meantime, gold is lower. But understand, if that is truly the case where Iran hurts the economy meaningfully from here, the Fed's response would likely be, to Chris's point, print money, try and save the day, and gold could see a rally. I don't know when that could be a year from now. That could be 2 days from now. I just wanted to point that out. I think it's a good point. That is why long-term is different than short-term in markets. Like macro long-term is different than macro short-term. On a longer-term basis, you've got to look at actual values. Like where is inflation on an actual basis? Short term, you're looking at how it's coming in versus what people had expected. Two different games, and take your pick. But EdgeFinder helps with both, so get a copy of EdgeFinder. There's your pitch for the day. By the way, real quick, we are doing a VIP sale right now currently for our VIP memberships. If you want to see the trades that are being taken by myself, Chris Pulver, Marco, Ivan, the VIP group is currently 40% off right now. What we'll do here is, James, if you don't mind, maybe switching the QR code below me just so that people can scan in or click the link being dropped in the chat. You can message into our support team. They'll set you up with access. There you go. You got 40% off with this QR code. Scan in. Let us know you're watching the stream. We can set you up with a payment plan if you want to set up access to our VIP trade alerts or EdgeFinder or Stockbox. Our team is happy to help you out with any of those options. With that said, guys, up next, we have the one and only Miko Audu going through technical trade setups. He is a chart beast. He goes through all sorts of different markets. So stick around with him. Ask your questions. He's very good about answering chat questions as well. So here comes Miko just after this quick break.
If you're enjoying the stream right now and would like to join us beyond just live streams, consider joining our free to join Telegram channel. Inside of our Telegram channel, we're sharing daily market analysis, bonus clips from the live streams and videos, giveaways to our products, prop firms and brokerages, and much, much more. So like I said, if you're looking to stay up to date with ideas that we're looking at in markets, even if you can't make it to a live stream, consider joining our Telegram channel down below in the description of this live stream or being dropped in the live stream chat as we speak. Just click that link, it'll navigate you over to Telegram, click join, and you can come back to the stream. It's totally free to join, and if it's easier for you, you can also just use the QR code that you see on the screen right now. Now back to the live stream.
Okay, what's up people? Welcome back to another guest stream. Hope everyone is doing well. As always, I'll go through a bunch of markets which I'm looking at, some which I'm currently trading, some which I was trading this week, and some of my forecasts for the upcoming week as well. If there's any particular markets you want to see, any particular time frames you want to see, feel free to drop in the chat. More than happy to take a look and share some thoughts as well. But I do want to start with the USD side of things first, and then we can shift to some other markets. I'm quite bullish on the dollar, with a bit of a caveat to that, because again, looking from a purely technical standpoint, there is room to the upside, but there is a massive obstacle above us around the infamous 100 psychological level. And I do expect to see price to go and attack that level. I do expect to see a breakout, but I'll let price confirm that first. I'm not looking for any big buying opportunities on the USD just yet. But if we were to see a breakout of 100, I think we could see a very significant uptrend here, because for the past maybe 1 year, or even more than 1 year, price has been in a very long-term consolidation. Of course, all of this is price building up and expecting a breakout, and typically we could see a pretty big breakout. As the kind of theory goes, the longer the consolidation, typically the bigger the breakout. So we are due some strength, we are due some momentum. Again, it doesn't necessarily have to break higher, we could break to the downside, but I'm favoring a push higher. I mean, looking at the bigger picture for the DXY, there is a lot of empty space we can push into. Price has tried to continue this long-term bearish trend and seems to be running out of energy, and it looks like price is now forming a higher low in this area here as well. So I'm expecting to see something like this. Of course, we're going to need a bit of a catalyst. That's still a big break of structure we need to see, but that's the direction I'm looking to trade towards. Now, coming into the week, I was hoping for a bit more downside on the dollar, hoping for a bit more of a pullback to find some opportunities to short Euro USD. That was my main focus in terms of USD. We can take a look at that in just a moment, but essentially I was looking for price to revisit this area here on the DXY. Now, of course, I'm not really looking at the DXY, it's just a point of reference, correlation. So I was looking to see if the dollar could pull back into this 99.5 area, and from there we can go and attack the highs. Now, I'm not looking to try and trade the breakout necessarily. The plan was just look for a pullback and simply trade it back to the highs. And then let's see what price does after that. Maybe we reject the highs, maybe we see a breakout, or maybe we just consolidate at the level, who knows. But it looks to me that price, of course, is now testing the highs again. So again, price could very much come straight back down. This opportunity could still very much come into play. Maybe not this week anymore, maybe early next week. I still do like the longs from this location. And if you take a look at euro dollar, I'm pretty much looking at the exact opposite opportunity, which of course is some shorts from this area, which is basically the plan I had coming into the week. We just about saw a retest of this low, but I was looking for a deeper retracement. We've got the kind of the 0.5 of the fib. So I want to see that healthy pullback before I do look for positions. Again, that could still very much happen. It hasn't happened this week so far, but for whatever reason, we could still see more upside, or again, that could happen next week. So I'm still very much interested in this zone, as long as price doesn't go and break new lows. If we do that, then I'm not so much interested in that zone anymore. I'll probably be looking at some areas lower down. But in terms of the direction, in terms of my bias, it is bearish with Euro USD, a lot of the major USD pairs, and I'm leaning bullish on USD itself. I'm looking for us to return back to support here, and then we'll see what happens. Maybe you get a breakout, maybe price bounce from that level. Maybe you see a big double bottom. We'll address that when we get that. But for now, we've had all of this bullish momentum, hasn't really amounted to anything. And then we've had these corresponding lower highs that have just been forming since then. So the plan is looking for that that pattern to continue. If it is to continue, the likelihood is a push back towards that daily support level around 1.143. So I do like euro to the downside. Pound USD actually had a slightly better pullback. I probably should have kept more of an eye on pound USD, because that one actually did pull back into the zone I was mentioning coming into the week, which was this area. It's basically the corresponding area to euro. It's just pound actually got the test, but unfortunately euro didn't. But it looks like pound is doing something similar. We pull back into that zone, really healthy pullback, nice wicks over Tuesday, Wednesday, and it looks like momentum's starting to pick up as well. Pound does still have support to contend with. Before we do get to that lower zone, there's still this 1.33 area price might struggle with, but in terms of my sentiment, it is still very much pointing downwards. So I'm pretty bearish here with quite a few of the USD pairs. I'm still long on USD JPY, which I've held for I think 3 weeks now. It's been a while with this position. To be fair, it's just been slowly kind of ticking up. It's kind of like it's moving like an indice at this point, really. Not really like an FX pair, which kind of has its sporadic up down moves, very, very choppy, has its bursts. This is kind of like slowly ascending. So it's been a bit of a unique situation, but USD JPY is still overall pretty strong. And again, I haven't even been buying USD JPY because of my bias with USD. It's more so the bias with yen. Yen's just been so weak. It's been weak for a very, very long period of time now. It doesn't look like that situation is changing anytime soon. So I'm still very much looking to take advantage of that, and I'm still expecting to see a pushback to highs of 2024, which is my target. But I'll be looking to trail beyond that as well if momentum still stays. So yeah, dollar yen is kind of my main focus in terms of trade. I was in US 30 longs coming into the week, but I did get trailed out of that position. I had my stops just trailed underneath this low here. I did get taken out of that position. I believe it was Tuesday. Yeah, Tuesday got taken out of that position. I'm still looking to see if I can get back in. I'm still very bullish on US 30 as well. We are in a bit of a bearish situation right now. Price has broken through some 4-hour swing lows. We're forming lower highs and lower lows. So I'm kind of waiting for price to settle, find a bit of a base, maybe consolidate for a couple of days, and then see if we can form some higher highs and higher lows beyond that. And that's really what I'm looking to find some re-entries with. And then keeping it very simple, plan is to take it back to highs. When I'm looking to trade the indices, I'm simply just looking to trade that overall drift. So the plan is, take trades with a sizable stop loss, which can suffer some drawdown if need be, and kind of focus more like the 4-hour chart. I don't want to get too caught up in the intraday fluctuation. So yeah, US 30 still very bullish. I could take a look at gold. Of course, any recommendations, put it in the chat. Yes, I could take a look at euro pound as well. So gold's been super bearish. Really nice downside. Really nice downside this week. Really nice momentum. I do believe gold's trading in a very interesting zone right now. I am looking at my buy shifting from bearish back to bullish now. Reason being, if we look to our left, price is trading back into an area where we did find a lot of momentum previously. You can see this is basically the low that gave us our last swing high. So this is, from a structural perspective, a very significant low. And of course, price is just taking out this low here as well. So any previous buyers probably have stops below that low as well. We could be seeing some more buying coming into the market underneath that area. And generally speaking, this is an area which I'm looking for price to turn around. Now, will this be an area where price gives us the next big swing for gold when we push back to the all-time highs? Who knows? But it generally is a bullish area, and an area where I'm expecting price to at least bounce. It may end up something like this, but I'm looking to see if I can take advantage of that short-term kind of bounce. If that happens, of course, it doesn't necessarily have to happen, but that's the area I'm looking at. So gold, I'm shifting to more of a bullish bias right now. But in terms of the technicals, it's way too early for me to be jumping into any longs. Price is still looking very bearish. We're still falling out the sky right now. Momentum is still really with the bears. So there's no sign of support really forming. There's no sign of structure shifting. That could still take maybe 24, 48 hours or even into next week. So I'm going to be patient with gold, but in terms of the location where we're trading, I do think this is a smart place to be looking for maybe some intra-week buys, maybe a push back into this zone where we found some significant bearish momentum. A push back into there does look pretty realistic. We may come back down, but this still could be a worthwhile move to take advantage of. And of course, maybe if we're lucky, we get a bigger reversal. So yeah, gold, unless you're short, I would be very patient with gold. I wouldn't be jumping into sells just because, of course, where we're trading, we're coming into a big zone. We're just taking out some significant lows on the daily chart. I don't think this is the best place to be shorting unless you're on like a very super low time frame and you're looking for a very short term scalp. Okay, that's different. But for a trade for a day or for the rest of the week, I think we're a little bit too low down to be jumping into any shorts, and I think we're a bit too early to be jumping into any longs. So really the plan is with gold, let's see if we can settle here, find some structure, find some higher highs and higher lows, and then we could find a nice trade to take us back into some structure there. That's really my thought process with gold. But I'm kind of finished with the sells for now. Okay, I'll go through Euro Pound next. Not a pair that I've been focusing too much on recently. But we can absolutely take a look. So Euro Pound looking choppy as always. Very choppy conditions. But to be honest, if you know what you're doing with these type of structures, these type of environments, it could be very profitable, especially if you position yourself well. Essentially, price has been bouncing on this support level since early Feb. And looking to buy from that level has been pretty profitable. Of course, it's not going to hold forever, but so far, price seems to be finding it very difficult to break through that low. And I wouldn't try to overcomplicate things with Euro Pound. Sure, maybe price is getting ready for a break lower. We've seen significant lower highs forming. Maybe we could see price eventually tick lower. But for the meantime, if I was looking to trade Euro Pound, I would be looking for some short-term buys off this low. As long as that support holds, buys still make a lot of sense. If this does eventually break, then we can speak maybe about some pullback opportunities and more downside. And same is true for the opposite. If price was to push back into resistance there, I think that would be a great place for a short. You're just trading the range. Price is just up and down fluctuating. What you really don't want to do is trade inside the middle. That's where the most noise is. That's where you're not really going to find adequate places for a stop loss. It's going to be very difficult to take some really good trades in the middle. At the extremes of the range, that's where it's at. It gives you the best chance to take a successful trade. Nothing's guaranteed. Price will eventually break out, and you could take the short or the long where price does break out. But again, that's just trading. You're just taking calculated risk. So yeah, in terms of Euro Pound, I'll keep it super simple. We got a clear kind of range where price is oscillating around. I'll just be looking to buy as low as possible, get stops underneath the low, and then take advantage of those short-term bounces. So yeah, that's my take for Euro Pound. Okay, I'll quickly go through. Okay, Joseph, Euro CAD, New Zealand dollar, absolutely. Saw Pound USD there as well. We can absolutely take a look at that. So yeah, Euro CAD, again, not a market which I've been looking at too much, but I can definitely share some thoughts on it. Looking at too much, and I got a lot of drawings. I think I was looking at it last week for someone on my stream. But yeah, it's not a market I've been trading a lot. So yeah, in terms of Euro CAD, okay, so yeah, I was mentioning that we're just trading this larger range. Essentially with Euro CAD, kind of similar to what I was saying with Euro Pound, looking to sell high and looking to buy low is really the best play. Of course, I was mentioning support around here, really attractive place for a long if price was to revisit. Of course, we're nowhere near that low, but that still stands. If price was to come back there, that would be a nice place for a buy. It looks like price is struggling to break above this high here as well. We're seeing a lot of resistance. We tried to break out, I believe that was last Thursday. Failed to break out. Now price is back within resistance. Let me just get rid of the drawing so it's clear for everyone to see. So yeah, price is trying to break through resistance, but essentially having a very, very poor time. So this is still a really nice place for a sell. You know, price is still very, is showing a lot of rejection, multiple wicks, failed attempts to break through. This is really a place where you're going to find some really nice entries, especially if you can get stopped above the highs there. Now, again, it may just give you a move back into support. It may give you a move all the way back down here. That'll be the most kind of optimistic case. But in terms of entry locations and a stop loss in a safe place, you're finding some nice opportunities here. I mean, you see so many wicks, so many rejections. Of course, had a bit of a fake out there, but we're back underneath that resistance. That still looks really attractive for a short. And if you were to see a breakout, then we're looking at the momentum continuous back to high time frame resistance, which I was mentioning last week as well. We could be seeing a push back to that swing high. That is if this level goes, but at the moment, that's not looking like the case. So yeah, EuroCAD just looking to sell high, significant area we're trading at. That looks the most attractive opportunity right now. If you're looking for longs, I'd wait for this level to be broken thoroughly first, and then we can find some pullback shortly afterwards. In terms of New Zealand dollar, another USD market. So as I've been saying, I'm leaning pretty bullish on USD at the moment. So I'm looking at a lot more downside. It's just New Zealand dollar just in a bit of an awkward place to actually sell. I said that because the market is quite choppy, and this is really the area which I want to be selling from. I don't really want to be looking for break and retests here, not because it won't work, just because when things are very choppy, you don't want to be too intricate. Your stop loss is actually more important than the entry itself, really, especially when things are choppy, because you want your stop loss to be above the noise or below the noise. If your stop loss is in the noise, then you're going to be at risk to getting wicked out pretty easily. So I don't want to get a stop loss above here unless I'm looking for a very short-term trade. But I'm pretty bearish on New Zealand dollar. I'm looking for a push back to support down here. Again, if you look at the bigger picture, we've just been ranging back and forth, and I'm looking at us returning back into support around 0.555. So yeah, I really like the opportunity if we were to see that. Of course, it's not looking like that's going to be the case. So the next best opportunity, I would say, is if price was to really push away, maybe come back and retest support. There could be some short-term longs off that. But I'd like to see price pull back up and then get the sell on the retest of that zone. At least that way price has had a healthy retracement, which I can try and find the top of to short there. So yeah, New Zealand dollar, I'm pretty bearish, 0.55. That's the direction I'll be looking to trade in. I'm not really interested in buys. There could be a short-term bounce there, but I'll just stick with the longs. That's the plan I have across the board for the USD pairs, really. But yeah, expecting a lot more downside for New Zealand dollar, and pound USD, pretty much the same situation as well. Expecting more downside for pound too. Just as we discussed earlier, looking for a pushback to 1.315, 1.32. So yeah, you mentioned you have a position in pound USD. I think, I don't know where you're positioned, but I personally would be pretty bearish with this one. I'm looking at a lot more downside. In fact, if price was to maybe come back and retest that zone, and if euro doesn't give me the setup I'm looking for, I may just jump ship and go and look to trade pound USD. It's a very similar trade for euros, basically looking at the pullback into that level, which is kind of corresponding to what pound was doing. So if euro doesn't give me that, I may just jump ship and trade pound USD instead. I can still get a pretty safe stop loss. I'm happy from the zone I'm trading. We got kind of oh, that's a very awkward line. Let's do that. There we go. So yeah, that would be my first target for the trade, but from a high time frame perspective, I will be looking at that 1.32 area. So yeah, USD, I am leaning pretty bullish right now. Yeah, I'm leaning pretty bullish for USD. So pound, I'm leaning pretty bearish at the moment. Of course, things are still choppy. It's not like we're seeing a lot of aggressive momentum. So the idea is not really, okay, I'm bearish, so let's just short. It's very much still waiting for price to achieve certain levels, certain areas, certain locations, which I want to be, placing my entries and my stop loss around. So even though I'm bearish, price could very much still push down, bounce to support. It could even give a really nice bullish opportunity. It's just that's not really of my interest right now, because according to my analysis, at least, looking at the bigger picture, it does look like the market has got a bit more of an incentive to head lower than higher. And if I've got that kind of incentive, that kind of read on the higher time frames, then all I'm doing on the lower time frames is trading in that direction until I'm proven wrong or price hits my target. What is your thoughts on Euro Aussie? Okay, I can take a look at Euro Aussie. Absolutely. Bullish reading on the edge front. Okay, there's plenty of space to run. Now, okay, we can take a look at Euro Aussie as well. Euro pound may break that area. I would still be looking to until I see a breakout, I'm never really going to try and trade as if the breakout is going to happen, if that makes sense. Because I mean, from my experience, there's been many times where I'm expecting price to break a level, and then I'm kind of trading with that in mind, that I'm expecting something to break, and then it doesn't. But the funny thing is, it could break maybe in a week's time, but you don't want to be taking any kind of trades directly into resistance or into support with that expectation. Let it break, buy on the breakout or wait for pullbacks, depends how you want to trade. But I do think we can see a break, but I'll wait for it to happen. And in terms of happen, I mean like a strong candle closure as well. But in terms of Euro Aussie, I'm pretty bullish. I do like the upside. I do like the room to the upside. I do agree there is definitely room to the upside. And the market has been quite exhausted. It's been selling off quite a while. It looks like we're forming a bit of a floor here around 1.61. And now we're seeing price break structure to the upside. If I go to the 4-hour chart, we had some resistance for the past couple of weeks, finally give way this week here. So we had the higher at 1.6381. That's been significant resistance. Price has now cleared that. So I do expect more upside for Euro Aussie. I'm not getting carried away with the bullish bias, just because again the higher time frame picture is still pointing down. It may be tiring, but it is still pointing down. So I like the idea of pullbacks and more upside, but as soon as we get back to this area, I would be very, very careful about holding any longs. Let's say if we got a position that looked like this, that would probably be my take profit. There is room, we could even go higher than that, but because structure's still pointing down, I wouldn't be surprised if we see another bearish leg, another lower high form. So I do absolutely agree, there's a lot of room to the upside. The market's quite exhausted to the downside here, even failing to create new lows. Now we're seeing some bullish structure come into play, especially with a lot of emphasis here as well. So I do like the buys. But yeah, I think 1.67, 1.67 around there. I think that makes a suitable level to lock in some gains. Of course, depends how you trade. You might trail stops. That's completely up to you. But based on kind of how I look to trade, that would be a level which I think would make sense to either remove risk or pay yourself somewhat. But I do agree. Euro Aussie does look like there's upside, especially with Aussie looking quite weak too. Yeah, Aussie is looking quite weak. I'm coming into this zone, which is a zone I'll be a bit cautious about, because again, this kind of corresponds to the analysis I just did on Euro Aussie, but again, you can see the bigger picture is still pointing up. So as we do come back into this swing low, that's obviously naturally a place where buyers could come in and we could see another higher high. I'm not necessarily expecting that to happen, but again, as a trader, I'm always looking at what is the opposition thinking. What is the opposition, or where could the opposition look to take the opposite trade against me? I would say as we come back into this low, that's where I expect buyers to come in. Of course, They may not be successful. Price may go and break through, but that's an area where I'd be a bit more conservative. Locking in gains, however you want to manage your trade. But yeah, Aussie looking pretty bearish, more bearish at least in the past few days than Euro. But yeah, I think that might change. But yeah, guys, we have approached the end of my segment. I do appreciate each and every one of you tuning in. If you have enjoyed my segment, feel free to check out my channel. I do more of the same over there. Appreciate A1 and Nick having me on the stream. But guys, hope you have a great day, a great week, and I'll see you all next week. Take care.
If you're enjoying the stream right now and would like to join us beyond just live streams, consider joining our free-to-join Telegram channel. Inside of our Telegram channel, we're sharing daily market analysis, bonus clips from the live streams and videos, giveaways to our products, prop firms, and brokerages, and much, much more. So like I said, if you're looking to stay up to date with ideas that we're looking at in markets, even if you can't make it to a live stream, consider joining our Telegram channel down below in the description of this live stream, or being dropped in the live stream chat as we speak. Just click that link, it'll navigate you over to Telegram, click join, and you can come back to the stream. It's totally free to join, and if it's easier for you, you can also just use the QR code that you see on the screen right now. Now back to the live stream.
Good morning. Good morning. How's everyone doing today? Hope you guys are doing good. Let's go ahead and talk about what's going on. I lost my train of thought. I was going to lead with something today, and I just completely forgot what I was going to say as I was about to say it. So my bad. If I remember it again, I'll definitely let you guys know. But like always, if you guys have any chart markups, anything that you guys want me to go over, feel free to put those into the chat, and I will do my absolute best to go ahead and address those with you. CMO, what's good? What's good to all the regulars here in the chat? I see you guys here from the previous show host, so good to see you guys as always. All right, let's go ahead and talk about the dollar real quick. So dollar index, as we all know, and I think a lot of us are in the same boat. And actually, let me know your thoughts. So we are now approaching the 100.5 level. And I know a lot of us are bullish on the dollar, but I'm curious to hear consensus here. What are you guys doing at 100.5? Are you guys, taking profits, or are you guys going to let it break? I guess the question would be, if you think that 100.5 is going to break to the upside, go ahead and press 1 in the chat. And if you think that it's going to hold as resistance, go ahead and type 2 in the chat. I'm curious to know what you guys think on this. So we are kind of grinding up here. You have some back and forth about headlines in the Middle East. Some saying that it's going to escalate, some de-escalate. You're having some inflation figures, but again, type 1 in the chat if you think that 100.5 is going to break to the upside, and 2 in the chat if you think that it's going to hold as resistance. We're seeing some 2s. We're seeing 1s, so it's 50-50 right now. So pretty much in line. Okay, so now we're more leaning towards 100.5 is going to break. Sounds good. Sounds good. Mazzy from Twitch, how you doing, man? Hedge Allen, I still in the case breakout short UJ to cover. Yeah, so it's a very important level, right? It's a very important level. I think we all agree on that. It has capped gains for some time now, since March of 2025. Yeah, so since March of 2025, it has held as a very strong level of resistance. So we have some inflation figures coming out of the US that are pointing in the direction of higher inflation. We do have a Fed meeting coming up as well. We have solid growth, and we have a pretty strong labor market as well. Now, I do think that we got some employment figures. So jobless claims ticked up a little bit by 9,000. So not a humongous miss by any means, kind of an inline expectation number. But we had a very strong NFP report, came out double than what was expected, right? So that gives the Fed. I must be hungry right now. I think that's what it is, guys. I haven't ate yet. That gives the Fed the room to go ahead and cut or hike interest rates if they need to, right? So if we reflect to the later part of 2025, that was one of the big pressure points, was like the Fed has this dual mandate. They want to address inflation. However, the labor market was not as strong as it is today, right? So that was one of the things holding them back. And so they have that dual mandate, and they had to balance kind of the risks on one side being, hiking into an environment where you have the labor market's not looking too good, or just letting inflation run. Now we have a different scenario. Now we have a scenario where the labor market is taking care of itself. And so the Fed can actually pivot onto inflation without the worry of hurting the labor market. So to give you my honest thoughts and opinion, I think that 100.5 does have the potential to break. Now, I think you need to see continued good data out of the US. So if we were to see some stalling out at 100.5 and you start to see some misses in the growth sector and some misses in like the employment numbers are starting to weaken a little bit, then I think that 100.5 is going to hold. So what does that mean for me? What does that translate into? Well, by Friday, if the dollar index is just kind of trickling here, slowing down, I'm going to just take my profits on euro dollar short and on silver short, and then I'm going to re-enter the market again on Monday or on any meaningful pullbacks. So I don't want to just be hanging out here and DXY is stalling out, right? I would rather just take profits and either get in on this. So let me show you. I either get on a break and retest. That will go ahead and confirm that the momentum to the upside is very strong and valid. That's what I would wait for. Or I would wait for a slight dip in the dollar, maybe back into this level here, and then buy it again. Nonetheless, I want to be bullish dollar until the data no longer tells me it's not the right play, right? But I don't also want to be caught right here. So I'm going to take my profits most likely on Friday. Now, what would cause me to not take my profits is if you just get a breakout and a continuation, and then I can just trail my stops right along structure, right? That's kind of what I would do. But for now, that's most likely the scenario that I'm going to continue with. Reason being, right? Very solid level. History has told us in the past that it is very, very strong. Currencies are mean reverting by nature, right? They tend to do that. So this is actually very, very normal. This choppiness that you're seeing in DXY is very, very normal versus an asset class like precious metals or equities, where they tend to continue running up, right? They trend by nature. Very, very different with currency. So with currencies, I like to trade zone to zone. I like to, just do that, take hard stop and hard target levels. However, what would make this different is if you were to get a breakout and a continuation, then I can just trail with structure, and then 100.5 turns into a very solid level of support. But that's most likely what's going to be the case for today. Now, let's go ahead and talk about top down, what I'm looking for the rest of the week. Well, I like dollar CAD, and like Max said that we are pretty much going to hit 1.4. Now, this is one trade that I have liked a lot, right? I've shown my interest in dollar CAD. However, I just haven't had the opportunity to go ahead and buy because there hasn't been any meaningful pullback. So ideally, right, as we get to 100.5, I would love a pullback. I would love a pullback into dollar CAD. That's going to be the way I play this as well. So dollar CAD is on my radar. We have now since broken out of this level of resistance here, this 1.39, you can call it. So if we were going to pull back into this level here, I think that I'm, in a good place to go ahead and buy that. So dollar CAD's on my radar. Dollar yen is also one that you have to be careful with as well, right? Kind of why I'm also looking to, potentially take profits at 100.5, because they do have that intervention risk, right? Now, before they have said that they're going to intervene, and then they intervene and it didn't work. But again, they are for now defending that 160 level. Now, one thing to be careful is as well, you don't want to just blindly short dollar yen at this level, because at any given moment, maybe the Bank of Japan runs out of ammunition and they say, hey, we're not going to hold this level anymore. Maybe the new floor will be 163 or 165. Kind of like what happened to Euro Swiss back in 2015, where the Swiss National Bank said, hey, we can't defend this level no more. And then the thing dropped like thousands of pips in 15 minutes. Like the spreads were 4,000 pips wide. So imagine you are buying an asset class, or you're trying to get out of that trade, and you get filled 4,000 pips away. That is a risk that can happen with dollar yen. I'm not saying it's going to happen, but again, you just want to be aware of the possibilities there. It's not for certain, but for me, dollar yen, you got to be careful at 160. I would rather buy any dips than to be shorting dollar yen. Just my personal opinion, because the fundamentals underneath dollar yen, the drivers are still there. You still have a wide differential between the US and Japan. It's going to stay pretty much the same, and that's going to naturally drift dollar yen higher. So that's my thoughts on dollar yen. I know a lot of you guys have, dollar yen on the radar. I like that one, but just on the buy side here, buying on any dips. And just to kind of cover the levels real quickly here, I like 158. I think 158 is a good level, and I also like 156 right here where that 200-day moving average is starting to creep up there. So if we somehow get back up there, I'm going to be a buyer of dollar yen. I like that a lot. Mihet says I'm on GU Coaster. Nice, man. Well, GU's doing quite well, right? Yeah, that 200-day moving average is somewhere right here. If you guys traded into that, I know that was something that I was voicing as well. You know, dollar strength. That 200-day moving average seems to be like a very strong level. So I hope you guys took that trade to the downside and you guys are in profit there. So we are now hitting a micro level of support there on GU, I would say. So somewhere around here. And then the bigger zone would be to the bottom right here, 1.32. Right, that would pretty much be like the dollar index is 100.5, right? So this is very, very good. So congratulations there. Hopefully you get that breakdown to the downside there and you can just trail stops below structure and continue riding that train. Fantastic. Speaking of GU and euro dollar, let's go ahead and look at the edge finder here to see how things are looking, because I do use this tool a lot to kind of gauge and filter out, potential trades that I want to take. So let's go ahead and look at that. So dollar is still very bullish there, or not very bullish, is getting a bullish reading of 6. So we did get that jobless, what was it? Jobless claims that missed a little bit today. So that's going to hinder the score just a little bit there. So bullish there. You are seeing euro dollar bearish still, Aussie dollar bearish, Kiwi pound dollar bearish. So you're still getting some bearish reads on the counterparts to the dollar, but not as strong as it once was. So again, I'm going to stick with my kind of framework here. I'm going to see what happens at 100.5. If we start to stall out, I'll probably take my profits and then just re-enter on a pullback or a break and retest. Nonetheless, I want to wait for that technical confirmation and, of course, have the edge finder guide me there. So, guys, by the way, definitely get yourself a copy of the tool. I would say it really has helped my trading. I love it. I use it every single day. It makes fundamentals as easy as technicals. Like literally, if you want to make it as simple as possible, you just go to this main page here, top setups. You see what's bullish, bearish. You match it up with the chart, and it's as easy as that. So the tool definitely will pay for itself. This thing has paid for itself many, many, many times over by now. So it's awesome. And also to just join the Telegram channel as well, free value. Join the live streams as well, right? So you can see how we use the edge finder, how you use the edge finder. You can adopt your own way on how you want to use it in a unique, personal way to you. So definitely get yourself a copy there. We'll put a link in the chat here very, very soon. All right, let's go ahead and continue with the chart markups here. I am holding oil shorts. What do you think? Actually, you know what? So you have had, I've been noticing this with oil. You've had some, I would say, escalatory headlines hitting the tape there. Yet oil is kind of trending lower, right? It's drifting lower a little bit there. So I like to see that. Now, I would rather short oil at a more premium level. Again, I don't know where you're filled at, so I should probably ask that question. Where are you filled at? But I think oil to the downside is a good trade at these premium levels. If you're trading within right here, you're kind of trading within the bottom end of the range, nonetheless still within the middle part of the range there. So not the best risk to reward. I think that fundamentally too, oil is just supported by, you have a strong dollar. You have, in the summer months, usually you have that seasonality effect as well, that you get more increased demand for oil. I'm speaking personally here in the US, and I know it's the case along other countries as well. But in the summertime, people are going traveling, they're taking road trips. That's a big thing here in the US. Lots of good stuff. They're buying more things. So when you're buying more things, more things need to be delivered and transported along trucks and whatever the case. So you do have some fundamental drivers from a seasonality perspective pushing oil higher. But I do think that if you were to get a solidified end to the war, then I think a lot of that premium gets priced out of oil. And so that short trade could be worthwhile. However, you have to be, at a good price for that, right? You don't want to be, selling at 89.69 where it's at right now, because you have a lot of choppiness to kind of navigate through. Anything that pushes in an escalatory way will push oil higher. So you don't want to be in that. So it just depends on one price you're in. But yeah, that's just my thoughts on oil. Marco, man, how are you doing?
Hello, I'm doing pretty well. How are you?
Pretty good. Someone said, said, Alan, update the app. Dude, it's been over a week. I don't know what app.
I think TradingView, because on the top right, it says update the app.
Yeah, I think I have noticed that green button there. Ace, thank you for that, man. I appreciate you notifying me. I'll update it. You know, Marco, this computer never sleeps. Like
Okay.
this thing is on like for
Uh-huh.
weeks at a time, which
So
I
it never updates.
it never updates, and if it
Yeah.
doesn't need to, it doesn't. But thank you, Ace. Appreciate you. But Marco, man, how are you?
Pretty good. I like the hot PPI print. So expected, absolutely. I know that the forecast was for a bit of a lower print, which didn't really happen. So if we look at the year on year, let's just put that up on the stage. It went from 6 to 6.5. Personally, I thought the reaction was gonna be a bit more prominent, but so far it's kind of the situation is a little bit bullish dollar, but not much. So the reaction, I would say, is muted. Well, what do you think?
Yeah, PPI definitely rose again, which is not good. I think the reason why was kind of a muted response from the dollar. I too was expecting a stronger dollar or a more exciting reaction to the PPI print, but then we have core. So core actually took the lower there. So that's food and energy. So maybe that's good news, right? So sometimes the Fed officials like to pay attention to core. And if core is going down, that's actually good for the inflation story in the US, meaning it's kind of trending lower. But again, this is just one print out of many, many prints. So
Yeah.
I think still the case is bullish dollar. I mean, you had CPI yesterday, right? Continue to stay elevated. PPI today elevated. So we'll go ahead and see how that develops. I'm very curious to see how the dollar reacts now that we're at 100.5 now. Now that we have all of these inflation prints out of the way behind us, we are at a crucial level here, and it's just a matter of the bulls really taking over 100.5. I think that there's a case for either a breakout or it just stalls out and it holds resistance. I think it's a kind of 50-50.
Yeah. I mean, we do still have the sort of the bullish dollar story that is prominent, and I think we could have the strength to break out of this range, which could then start a nice uptrend. The question is, of course, what would be the catalyst? So would the catalyst be another escalation in the Middle East because I know Trump is acting up again and talking about new attacks, which probably won't gonna come because if he's gonna attack, it's probably gonna be not announced before, but all of the announcements that he does is probably a scare tactic. Anyways, the Fed meeting next week could be a catalyst, absolutely, especially if that dot plot gets revised to the upside. So I think positioning long dollar and just holding that view is the best approach right now if you're looking at the macro. Now, if you're focusing on some specific nuances, then you could take some other stuff as well. But just as far as macro goes, like the only position that I see at the moment is long rates, which is then long the dollar. What do you think? So just looking at the macro, what do you think is the opportunity right now?
I think that's probably the biggest fundamental driver right now for the dollar. Like earlier in the months of 2026, a lot of the biggest tailwind for the dollar was the war, the safe haven status. I think that's no longer as heavily weighted as it is once. Sorry, I say that again. I don't think it's now as heavily weighted as it once was. So the whole like safe haven appeal for the dollar is probably not as strong anymore. So I think the biggest driver is going to be rates, of course, which that's the backbone of currencies, right? Like interest rates and all that good stuff. So I think that's the biggest thing. I'm also very curious to see what happens with the Fed meeting. Like, is there going to be a lot of division? Is there not going to be? So me personally, Marco, unless we get a breakout of 100.5 before then, I'm actually going to be open-minded to taking my profits off the table once again here at 100.5 and then waiting for another confirmation technically of a breakout. If you get the breakout to out of 100.5, like a break and retest, then you're pretty safe to go ahead and go long there because you are now breaking out of this multi 1 year range that we've been in more than a year. So I like that. I think there's nothing wrong with that. Also, too, there is also because we don't know what's going to happen. there's a possibility that, we have some kind of a dovish stance or something happens with the Middle East, right? Tensions get better, or there's a ceasefire or a solidified deal. I don't know. And because I don't know, I'm open-minded to taking profits and then just buying the dollar on any dips. So I think it doesn't hurt me either way. So that's most likely what I'm going to do by the end of tomorrow if we don't get the breakout of 100.5.
Okay. And you're thinking of even doing it tomorrow, so not waiting for Wednesday, but closing it out for this week.
Mm-hmm.
Okay, cool. What about silver?
Silver, different. Silver's very different because so unlike currencies, I was explaining this to the audience, but like currencies are mean reverting, right? So like this ugly range, although it is unfortunate and ugly or whatever, this is actually very, very good for currencies. It's what they do. They mean revert over time. Whereas Nasdaq or equity markets or metals, for example, they tend to trend in a direction as long as the fundamentals and the wave supports it. So with silver, it's a different story, right? It's actually trending lower here. So I may be open to, I have my stop loss above that 200-day moving average. So as long as that's the case, I'll leave the trade open. With currencies, for example, euro dollar, that's going to be a different story. I'm going to wait on that one. But with silver, we are actually hitting we did tap into it. So we're bouncing off of this level here, this like horizontal-ish level. This here, let me go like this. So if you kind of stretch this across to the right here, we actually did tap into this level of support, and you can see here that this position is very, very small. So up $74 here. I was going to wait for a breakout lower. So if you do get a breakdown lower, then I would just trail my stop here. But for now, the structure that I'm trailed behind is that 200-day moving average. So that 200-day moving average is going to be my wall there. And if you get a breakout lower with silver, then I would just bring this down above here and then just continue trailing. And I do have a hard target here at this channel here, this bottom channel here, descending channel. That's where I would be at. So that's kind of my thought process with silver.
Sounds good. And yeah, so the mean reversion theory is absolutely true. And with currencies, usually they mean revert, so it's not good to have a very, very long-term bias unless you have pretty good fundamentals behind it. But with stocks or metals or crypto, you can pick a direction, and that sort of trend can last much longer than on currencies. So the approach is much different, and I would say the reward to risk is actually much higher with trading a positive skew or a negative skew asset compared to currencies which are mean reverting, where you should have maybe a 1.5, 2 to 1, maybe 3 to 1. So it's much easier to get a very positive reward to risk when you trade, let's say, gold or stocks or the NAS or the S&P or Tesla. It's definitely a different approach, and I think people don't really realize how much difference there is. And there is a lot of difference in the trading style.
And I will say too, like there is a world where I trail stops on euro dollar, and that scenario would be you get a breakout of this range here, because you can also see what happens when you break out of a range, right? So like this right here, this was a range, this right here, right? You broke lower. Okay, it makes sense to trail stops, and you see that follow through there. So similar situation, they tend to range. That's kind of their environment. However, if you do get some kind of a breakout out of a this is multi-month range here, then it does make sense to go ahead and trail stop. So, but for now, again, this range has not proven to have broken out, right? It's still by definition in a range. So that's why I'm proceeding that way.
Absolutely. And so what do you think about the supply on stocks in general in the next few months, let's say? So we have potentially 3 big IPOs coming out. That means a lot of supply will be put into the markets. Do you think it gets absorbed, or do you think we see a reaction? Because also one study on the stock market tells us that once there's more issuance of stock, IPOs or stock issuance instead of buybacks, like Google has flipped from buybacks to issuance. They're running low on cash. They want to collect. Meta is looking to do the same because they're seeing Google. They want to compete. They want to follow them. So what's your take on that? I know it's basic supply and demand, but still it's very complex mechanics. So a lot of things can actually happen.
Yeah, I think in this day and age, like there's so much liquidity out there that I don't think it would be a
Yep.
problem.
Yep.
When it comes to, for example, the IPOs that are coming up, I forget who it was, but it was Chris and Nick. They had a segment. I was listening to it, and Chris had a chart essentially going over the drawdown periods of IPOs, and for the most part, um, for the first year, I believe, after the IPO, they were in deep drawdown, and the
Absolutely.
average was like 20 something percent or 30%, something like that,
Mhm.
or maybe even higher. But there were some outliers out there that pulled those numbers uh, up. So that 20-30% drawdown that they were talking about is actually a conservative number, because you do have some outliers where they're up big, right? So the actual number, if you remove those big outliers, is way worse, actually. So I
Mhm.
do think there's a
Mhm.
case for that. I know the market right now is essentially kind of hanging on to this idea of it's just a broader rotation that you're seeing out of the Nasdaq into the broader market.
Yeah. Yep. Yep.
But if you start to see, for example, this technical structure that we're seeing on equities, right, to the downside there, where you're getting all of these pops faded off, right? Like we are consistent. Like if you go to a 4-hour chart, right, it looks like a downtrend that's forming, right? So if you continue to see that
Absolutely.
that
Yep.
downward pressure and correlations go down to 1, then you actually do have that you can call liquidity problem, because cash has nowhere to go, nowhere to escape. If everything is selling off, there's no investment to be made, and so it goes to cash, and then that's where you get kind of that supply and demand issue. But for now, I think the market is holding on to that theme that this is just a broader rotation until proven otherwise. And so yeah, that's my thoughts on the stock market.
Yeah, an interesting indicator that just hit yesterday. So I talked to you about the Market Wizards book, and in that book, there's a trader called Qual McGee. It sounds like Quagmire, but it's not Quagmire. It's
Yeah,
actually
Quail Maggie, yeah.
Qual McGee. Yeah, I guess he's Polish or something. Anyway, so what he talks about is a very easy way to identify a trend is go to the daily chart, put on the 20 and the 10 EMA and see what they're doing. So if they're pointing down, it means the downtrend is starting. And if the 10 is crossing the 20, that's kind of a confirmed downtrend for him, which means that he's going to probably tailor his strategy or tailor his approach to be much less bullish and to look for less bullish breakouts in stocks. So that just happened yesterday. And I thought that was a pretty interesting indicator to bring up, because in my opinion, the catalysts are mostly pointing bearish. All of the things I'm looking at, the higher rates, the massive retail participation, the IPOs coming out, the massive supply that's going to come out, it's a bunch of smaller things accumulating into one big thing. And as far as the bullish story, I'm seeing some stuff, but I don't think it's enough. So I think this could more easily roll over rather than just continue up. So that's my take on the whole situation, and that's sort of the reason why I'm being patient on the things like the Nasdaq, pretty much.
The
Where I
way
was,
the way yeah,
yeah,
the way I see it, and let me know if I'm wrong in my thinking here, but this is kind of
okay,
like my observation is like the market is front running good things. It's like choosing, it's like making excuses. Like um, the first thing that it was running away from was the war. They were basically front running the idea that the war is going to be over. And then they're trying to escape this higher interest rate environment. So now they're going into AI and positive earnings and this and this and that. That's kind of like the excuse, right? And now you're
yep,
getting the excuse of like, oh no, this is just a broader rotation. Like
yeah.
it's fine, all good and dandy. So like at one point, do you run out of excuses and you start to accept or realize that maybe the fundamental environment for this market is not as good as you think it is? And then what happens, right?
Yeah.
And so I like how you pointed out those indicators are those moving average on the shorter duration moving averages, because yeah, the technicals are starting to point in that direction, and you're starting to see it on the price action as well. Like what was it, the day before yesterday, or was it Tuesday, which is the most volatile market or the most volatile day for the Nasdaq in like 15 years, where you had a big up day,
Really?
or you had like a big move up, but then you also had a big move down. So I think the
Mhm.
overall move was like one of the bigger ones in volatility sense. So I think that's correct. Chad, if you can fact check me on that. I think it was on that Tuesday, but yeah, I mean the indicators are starting to point a little bit bearish. So I'm curious to see too for the edge finder. So I know we use this tool a lot. So that's
Mhm.
something that I'm going to
Mhm.
be looking at
Mhm.
as well. Right now, the Nasdaq is neutral. The S&P, I believe, is also neutral as well. Yeah, neutral as well. But I'm curious to see if we start to see some score flips, and I think that would be very interesting.
Absolutely, absolutely. Maybe some short-term tactical shorts, if you're into that, could be in play. For me, it's not my thing, but that could be, of course, a play if we flip to a bearish market. And again, we don't need to get like a 50-60% correction. We could just go to 2600 to the 200 EMA. That's still going to be a healthy pullback, and it's still going to cause a correction, and it'll still shake out a bunch of weak hands. So it's not like I'm a perma bear or like I'm Robert Kiyosaki just calling for the drop to get views on Twitter. But I think a healthy correction could happen, and the probabilities are personally telling me that a bigger correction than this could happen. Not a crash, but a correction, I would say.
For sure. I do like that 26,000 mark as well, which
Yep.
is kind of not that far. It's not that unrealistic. It's only 11% away.
Yeah, it's close.
Very, very doable.
It's close, and it would reset the market. It would make things a bit more fair valued, and again, shake out the weak hands, which is always a good thing for the market to continue gradually pumping up higher.
Look at that, Marco. That 61.8 from the low to the high is right there at that 200-day as well. 61.8% retracement. Yeah, so it's lining up.
That's great. And also, my USD JPY is approaching the 161 level slowly but surely. So if I bring that up, let's put it on the chart. Well, it was approaching it, but now it seems to be pulling back. Again, just a slow grind to the 161 level. And I'm not seeing any BOJ headlines. What about you?
Actually, I was gonna ask you. I saw something that Ueda's like sick or something, and he won't be able to make it. Yeah. Do you think that changes anything as far as like voting power or whatever? Like, what are your thoughts on that?
That is interesting and definitely important to discuss. Personally, I think they're gonna hike. So just a hike is gonna happen, but a very small one, which, to be honest, doesn't mean much, especially if the Fed is going to announce one hike in 2026. Then they're kind of bring it just back to neutral, or not neutral, but back to what it was before. But some market participants may get spooked because of that headline. So I think there's a lot of players in the MOF, in the BOJ. I don't think they need Ueda to do any sort of interventions or any sort of, let's say, more aggressive thinking, or thinking about aggressive actions, if that makes sense.
Yeah, no, makes total sense. So you are looking to, if you were to get a pop of 160, you were looking to go ahead and short UJ.
If we get 161, so I'll probably take an initial stab short, because I was thinking about selling at 160, which I think Forex James is in that position, which I think is a good position, but I would be worried to get stuck in it for too long. And the swaps with that sort of a position can be pretty high. So if you hold it for 1 or 2 months, which can happen, absolutely, that could be pretty expensive. So 161 seems like a better level. And as I mentioned, the higher we go, the higher the chance of an actual intervention. And the higher the chance of a quicker intervention where you don't have to wait for 4 or 5 weeks for something to happen. 162 would be even better. Like the level where the reaction was the last time, the biggest reaction in 2024. So first one was when we hit 160, and then the big one was at 161.6. We never really hit 162, but we were very, very close. Or let me check just on the highs. No, barely hit 162, but I think that's the critical level. Anything above 162, and the chance is like 70-80% that we get an actual intervention. So that could be, there could definitely be a trade in there on USD JPY. Euro Swiss, so talking about interventions, Euro Swiss, I think, is nowhere near the level. So if we go to Euro Swiss, let's take a look. It has kind of run away from the 0.9 level. So on the Swiss, I'm leaving it alone for now. I'm just not trading it at all. What about you? Do you have any Swiss ideas?
No, not Swiss. I was actually going to go ahead and pivot into dollar CAD, but I can go ahead and give
Okay.
my quick thoughts here on dollar yen as well. My only concern is that, well, it's very much contingent on the situation. So, dollar yen trading upward there, you do have the overall fundamental drivers there, but then you also just have a stronger dollar across the board that's really messing with them there. So they had that $11 trillion or 11 trillion yen intervention, and they got it completely wiped out there. My only concern is that the fundamentals are still strong for the dollar. They
Hmm.
continue
Yep.
to point that direction. And then you have a Euro Swiss situation where in 2015, the Swiss National Bank essentially removed that floor. I think it was 1.2. They were defending that floor forever, right? So similar to kind of USD JPY, you can think of it as people were just shorting 160 every single chance it got to 160,
Yep.
and they were doing it. And so the price action was actually flat at 160, or in the Euro Swiss case, 1.2. It was literally a flat line until the Swiss National Bank said, "Hey, we can't do that no more. Like we are, using too much reserves for this. It's not working out. The fundamental drivers are too strong." And so they removed that floor, and then you have a humongous reaction. Within 15 minutes, you have Euro Swiss dropping like thousands of pips. Like the
Hmm.
spreads were
Hmm.
at 1.4 thousand pips wide. So I was telling the chat, I was like, imagine trying to get filled at 160 and get filled at 4,000 pips away either direction, right? So like
Yep. Yep.
very, very bad. So that's kind of my only thing. Now, I think if they were to do that, the floor would just be moved to like 165 or 170, for example. But again, that's a very unique, probably rare case, right? I don't see that happening right now, just because you do have like the
Hmm.
rate story of like, the Bank of Japan is trying to climb out of those negative rates, so they're getting to 1% right now. That's pretty much priced in already. So it's not like the worst case for them to kind of do that, to remove that floor. But again, anything's possible. I would say I would really like for excuse me, I would really like for an intervention, but I wouldn't short the intervention. I would just wait for a buyable dip, just because the
Okay. Good.
underlying
Yep.
fundamentals still point in that direction. Does the spread difference narrow in the future? Sure, but it's still a wide spread. So I would kind of just be buying on dip. So I like 158. I like 155. That would be ideal, that 200-day moving average. And then, chase it to 160, or, at that point, 163. And then at that point, you're positioned where if you do get that risky scenario, or that rare scenario where they remove that floor, then you're riding that wave. You're riding that, right? So that's kind of
Absolutely.
how I would go ahead and kind of approach that. I was
Yep.
going to say dollar CAD too, breaking out of
Whoa.
this level of resistance. Yeah, dude, I missed the whole
Whoa.
thing. I've been trying for so long.
What's
And
happening here?
Max is over there DMing me every other day, screenshots, and I'm like, I can't do nothing. I think Max is in it, so congrats, Max. But
Yep.
yeah, this thing is
Congrats.
just moving. Essentially, this is reminding me of the Australian dollar position that I missed out on as well when I was originally trying to do so. But yeah, just breaking up to the upside there. Again, I'm looking to potentially take profits on euro dollar, which means I'm expecting a little bit of softness in the dollar potentially. And if
Mhm.
that does
Mhm.
happen, that can translate into dollar CAD getting the pullback, and I can finally enter. So I do like this level here, 1.395. So if this level of resistance, well, it's clearly broken out already. So I'm going to change this to green. If you get the pullback into that, that could promote a buy opportunity there, considering or contingent on the edge finder showing a bullish reading. So that's kind of what I'm going to look out for the next time. But yeah, it's broken out, man.
Yeah. Anything particular on the CAD? Because I'm not seeing this move on Eurodollar or GU. So this is pretty good. I know that the CAD is super weak. So I know that the unemployment or the employment rate is pretty bad. But other than that, I haven't seen much that would cause this to go up so much.
Bank of Canada yesterday held their rates.
Yep.
And I think forward-looking guidance, nothing has changed, so they're kind of going to stay there. So I can show you real quick, just for the viewer's sake here. If you look at that, so Canada held rates steady. They don't really want to change anything. So if you go to economic data and you go to interest rates data here, you're now able to compare multiple countries at once. So we'll just do the U.S. and Canada. Look at that, right? So, and consider as well that the U.S. is looking to hike interest rates, unless that's what the market's pricing in for December. that's only going to get better in favor for the U.S. So I think that forward guidance for Canada was not what the market was expecting. It's kind of dovish there. So that's what I think is pulling dollar CAD higher. And then you also had elevated inflation figures today, PPI growth. So there's just things that are very much in favor for dollar CAD. Which I want to participate in any chance I can.
Yeah, things are definitely accumulating for USD CAD longs. I'll be in there with you. I mean, if it pulls back, it's a good trade. And I've been eyeing the CAD for a long time because their economy is really suffering.
Yeah, it's unfortunate, but they're not in a good position, I would say. But Marco, I just realized here I'm going over my portion here. I want to allow you to do your solo segment, and then we'll hand it off to James. But thank you for the great conversation. We'll talk Friday. And one last thing before I head out, guys, everyone get yourself a copy of the Edge Finder and join the Telegram and Discord. The Telegram and Discord is completely free value for you guys.
Thank you, Alan, very much. This was very fun. I'm looking forward to speaking with you tomorrow, and we're going to have the SpaceX news released tomorrow, so that should be fun as well.
We'll see if that's the top. All right.
Yeah, absolutely. So thank you. See you tomorrow. Goodbye.
Take it easy.
I do want to mention, if you guys are looking to get funded, so we have the sponsor for today's stream, which is Ola Prime. Now, Ola Prime, you can get 35% off with the code A1 Live. That's for Ola Prime. What I like about this platform is the reviews. That's the first thing. So Ola Prime Trustpilot. If you look at their Trustpilot, they have a score of 4.6. That's a very, very high score, especially in the prop firm industry. Usually most prop firms, they have around 3.5, something like that. So this score is very, very high. The review number is nice as well. And I checked out the sort of the conditions, and they are swing trader friendly. They don't have the consistency rule, which is a big upside. So I think they're up there with FTMO, but with the code A1 Live, you get a much better price. So you get a much cheaper price than FTMO with this 35% off code. Check them out. And now let's get back to the markets. Okay, so Max says, yes, I'm out. 1.4 out. Let's see. I think that's USD CAD. It's just bumping up a lot. Okay, nice. So congrats, Max. This is an awesome position, an awesome trade. Max the GOAT. Max's real name is Bill Ackman. so Max is definitely on a pretty good streak this year. Let me just remove this. As far as my watch list goes, I still have 2 more minutes. So are you going to keep your MA like that? I'll just keep it there hidden. So if I need to check the trend, for example, on stocks, I can just enable it right there. So I'm only gonna keep the 20 MA running, if that makes sense. So GU, okay, it's dropping a little bit, which is good. So it was a signal in the A1 Discord. If you want to join, link is in the description. You can use the code Marco to get 25% off. Working out well so far. It's kind of a continuation of the trade that I had and closed last week on Friday. I still think this is pretty good. All of the reasons that I took the previous position are still valid, so it's all working quite nicely. Then I have USD JPY, which I talked about extensively with Alan, so I'm not going to waste too much time. And then I have the Nikkei. Now, I do still have the Nikkei, but I'm not so keen on taking a buy setup. First problem, well, the Edge Finder is neutral, right? So if I just look at the Nikkei, let's take a look. Neutral. What about the NAS? Neutral as well. With these things, with indices, I really need a bullish reading on the Edge Finder. I think it gives me a pretty high or pretty nice edge. That's why I'm going to be patient. Plus, all of the confluences that I'm looking at, most of them are pointing bearish. Interest rates, the retail hype, all of the IPOs coming out. Tomorrow we have SpaceX. Now, SpaceX will not come out at the market open. it'll actually come out 1 to 2 hours after the market opens. So it should be, I think, around noon, or maybe 10 or 11 a.m. New York time, but maybe even around noon. So we're gonna take a look at that. I have ran out of time. Let me just check the comments one last time. Happy to not be the Jim Cramer one. How about the DNA final giveaway? No giveaway today, unfortunately. USD Swiss. Okay, so that's about it for me. Don't go anywhere because you have James coming on in 30 seconds. I wish you good luck in the markets. Dollar longs seem to be the most obvious and the best trade to have at the moment. And yeah, that's it. I'll see you tomorrow. Goodbye.
What if I told you you could get a copy of the Edge Finder completely free thanks to this live stream's sponsor, 8cap? 8cap is a regulated brokerage that has a special offer for viewers of our channel here, and I wanted to tell you a little bit about how this offer works. There's really only 3 simple steps to setting up a free copy of Edge Finder through our partnered broker, 8cap. Step 1 is you have to use the link being dropped in the live stream chat or down below in the description to create a new account. Step 2 is go to this link, scroll down on it, and you'll see the requirements that you must make in order for 8cap to essentially buy a copy of the Edge Finder on your behalf. Once you've created an account and deposited the required amount of money in order to qualify for one of the offers on that page, step 3 is to simply contact 8cap and or A1 Trading's team. On that page, there will be information for that. And then we will be able to essentially grant you access to our tools completely free, bought and paid for by your new brokerage, 8cap. Unfortunately, 8cap does not accept US traders. However, if you're outside of the US and interested in exploring this offer in more detail, again, like I said, we'll have that link in the live stream chat or in the description down below. Alternatively, you can just head over to a1trading.com/8cap. Thanks to 8cap for sponsoring today's show. Now back to the content.
Hello, ladies and gentlemen. How is everyone doing? Happy, what day is it today? Thursday. Happy Thursday. Hope everyone's good. Just bear with me for 1 second. I just need to close one of my tabs. Okay, there we go. Hope everyone's good. So, what's going on in the markets today? Not too much on my side. I've not changed any position, so I'm still short on euro dollar. So far, so good. Really not much to talk about here. So yesterday, I think when we spoke, the market was pretty much pushing back to my entry on this wick. Since that time, as I said, I think in the stream, full correction back to the downside. I didn't see yesterday's news as anything noteworthy, really. And I'm short on Aussie New Zealand. I've been in this one for quite a while now. Actually, coming up on almost a month. I took it on the 22nd of May. It's currently the 11th of June. So yeah, coming up on a month. I'm also short on HK50, which is the Hong Kong index, and I'm short on a speculative position on dollar yen. Well, I guess all my positions are speculative, but speculative in the terms of it's not really based on fundamentals. It's more based on if the MOF is going to intervene or if they're not. So you guys are saying Max B is a market maker? I don't know. I think I've missed a conversation here. Maybe he is. So let's have a look at the Edge Finder before we continue any further. Dollar yen is getting a bullish reading along with the US dollar currency individually. We've got silver getting a bearish reading, CAD Swiss, Aussie Swiss, Euro dollar, Australian US dollar, New Zealand Swiss, US 10-year, New Zealand US dollar, and pound US dollar as well. So there's a very clear theme going on with the Edge Finder at the moment, which is basically buy US dollar. So I think we can keep it pretty simple and just go with that idea. So here is the dollar CAD. Unfortunately, I'm not in this position. I wish I was. That's unfortunate. So this one really is just a case of waiting for a pullback. If you've not managed to get in during this bullish leg, then you've kind of missed the move, as I have as well. So now we've broken out of these H4 highs. I think the sensible approach now would be waiting for a pullback to retest into the previous highs and then a continuation from that point. So maybe something like this. I think if we keep it super simple with the stop loss just at the low of this wick, yeah, I think that's probably the best way to go. Hold on, I can't see the chat. Keep clicking off it. A rising tide lifts all gold boats. I've got no idea what that means. I lose 2, but that's true start of June is a banger. Very good, Max. I'm happy for you if you've had a good start to the month. The Nikkei, don't really have anything on this one. I did quite like the idea of being a buyer. I was in buyers actually at one point, collected quite a nice profit on this bullish leg here, but since that point, I'm just not overly optimistic on the indices at the moment. So the Nikkei, the S&P, Nasdaq, so on and so on. So I don't really want to be involved. However, technically it looks okay. So bouncing off the 200 moving average. The problem that I'm seeing right now, though, is the 50 moving average here is acting as a dynamic resistance. So we're kind of trapped within these two levels. So yeah, I'm not really seeing anything at this time. Copper. Yeah, I don't really have anything on copper. I think technically looks nice, but the fact it's not on the edge finder and the H4 isn't looking too healthy here. So what we've got is the 200 did act as a nice support here, and it's now flipped into a bit of a resistance. So very sort of micro technical analysis there, but yeah, it's not looking fantastic. EuroCAD, I think we discussed EuroCAD, and actually this was, I think, the idea we were looking at. So, you know, we draw the, draw the fib from the low to the high, wait for the pullback, which is what's happened, and then the continuation to the upside. So this one typically is playing out really well, but I'm not in it. But yeah, there's not really much to go over there. Euro pound is getting quite a nice bullish sentiment across the banks at the moment. So basically relying on the weakness within the UK economy and obviously the lack of confidence with the political side of the UK as well. And the ECB hiked rates this morning. Again, as I said yesterday, it's priced in. It's not a big deal. But there is quite a nice relative strength differential here between the euro and the pound. So maybe long positions could be quite good, but the sort of issue I've got is just this downwards trajectory that the market's on. So we are holding the daily support quite nicely. However, we are continuing to make these lower highs. So I think, and this is a big I think, I'm not 100% sure. I don't really trade technical patterns, but I think in wedges like this, the typical outcome is actually a move to the downside, a break below the support, I think. Not really sure, but if there's any technical gurus in here, I'm sure they'll let me know. Euro Aussie. I really like this one as well. So we've been talking about Euro Aussie for quite some time, actually, basically when it was down at the lows. So it's maintained higher prices off this weekly support, which I think is a fantastic sign. We've got the Australian dollar obviously losing the strength that it's been having earlier in the year. And the euro is showing some strength. Even though the dollar is weak, I still think that even though the dollar is strong, I do think that Euro Aussie still has room to the upside. So now it's really a case of waiting for the pullback. So a fib from the low to the high, or wherever the high will be printed, which currently is here. Then look for a retest into the 50% retracement, retest this previous high on the left, and then a continuation to the upside. So obviously a break and retest into the fib, really simple setup. And the H4 has also established a bullish trend here on the moving averages. So yeah, pretty good. Aussie Swiss, I don't have anything for. I can actually get rid of this one. Let me clear this out. Silver. I still quite like the idea of being short silver. As I said, I think I said it yesterday, but I might have just missed the train on this one, which is really unfortunate, but it's the way it goes sometimes. So if we do end up seeing a pullback from this level, I think I would want to see it come up towards the 61.8, come back towards the 200 moving average, retest the previous lows on the left side here, obviously the previous support. That would provide the break. We've then got the retest and then a continuation to the downside. I think, yeah, that would be sufficient in my opinion. On the daily, it seems like we are wanting to or barely miss this level of sort of support, the previous daily low down here. So that kind of backs up my idea that we might be in for a little bit of a pullback, at least this daily 200 moving average, have a bit of a retest, let it act as a dynamic resistance, and then a continuation lower from that point into maybe 54, just because that's sort of the next major level of structure here. What do I think about pound Swiss? We can have a look at pound Swiss. I don't think there's really much on my radar. I was in short positions, or was in a short position a couple of weeks ago, but it fizzled out into nothing really. It just went straight to stop loss. So the problem is with pound Swiss is overall, it's a very bearish market. So higher time frame, monthly, weekly, daily are all bearish time frames or bearish trends. However, the market has broken out of the trend line, whether you trade trend lines or not, it's not a huge deal, but it's more a case of just marking out the lower highs that we've been printing. We've now created a higher high for the first time since, when was actually the last higher high? Sort of around this time, which was early 2025, about a year ago. So it's a little bit of a concern for me. The other fact is we don't have an edge finder reading for pound Swiss either. So there is no fundamental or no dominant fundamental drivers at the moment. And it's a negative swap market. So if you are short selling, fine, you're with you're with higher time frame trends, but you are going to be paying out of the nose for the swap fees. If you're a buyer, fine, you get paid quite nicely, but then you're against all of the higher time frame trends. So I think it's really a net negative market. There isn't a direction I could sit and happily say, I want to be a buyer or I want to be a seller, because I don't really want to do either, to be honest with you. I think JPY intervention is lurking by. BOJ is really careful. Well, yeah, I mean, no and yeah, because it's not the BOJ that do interventions, it's the MOF, but that's me being pedantic. So the thing is it going to be a case of history just repeats, and yes, we get up to these sort of highs around 160, let's say 0.5, just to keep it easy, and then we get the intervention like everyone seems, or at least the majority are expecting? Or has it become a time now where this is just too obvious? It's well, yeah, too obvious, so that they're not going to do it, and it might be a case of actually they don't do it, the market's anticipating it, nothing happens, and stops are getting run, and then when it gets to let's say 161, 162, then we get the intervention. That would actually make a bit more sense to me, but I've got no evidence to back that up, so there's not much I can do. So based on the evidence I do have, I don't mind taking this short position and just waiting to see what happens. The downside is I am obviously paying, because it's what do you call it? A positive swap market. I think I said negative on pound Swiss. I meant to say positive. But yeah, positive swap market on obviously dollar yen, carry trade dynamics. So it's not just a free trade to hold, unfortunately. I'm paying to be in this drawdown, which is a bit unfortunate, but I think it's worth the risk. Right. Just bear with me for 1 second. Sorry, guys. I just need to read something really quick. Okay. Right. So what are we doing here? So yeah, Edge Finder doesn't really have anything I'm overly interested in. I think the overall consensus is just go long dollar. I'm already obviously long dollar via going short euro dollar. I previously was in pound dollar, which was actually quite a nice trade. So by the way, if you follow me on Instagram, you will have got this trade idea for free. So we took profits down here. We took, I think it was like 1.5%. It wasn't a huge trade, but I just wasn't confident that we were going to run lower from reaching this point. It made a lot of sense for us to have this bounce here, correct the left side, and then run lower after a bit of a retest of previous support. So from this point, I don't really have an entry. There's not much I can see, because I would need to see a new low get printed. In that case, it would be obviously, fib from the previous high to wherever the next low will be, which could be, actually, I don't know about that. Maybe something like this. This is a bit of a stretch, though. So if we do continue to run lower down into, let's say 1.32, we have a bounce, retest into the fib, retest previous support here, and then a continuation, and basically just playing, pullbacks within the zones. It's super straightforward. So that could be the next idea, but unfortunately, I think there is not really much of an entry on pound dollar at this time. Aussie US dollar, however, I do still really like it, but again, it's where is the low going to get? Where is this market going to bottom out? I've got no idea. I would like it to be here, and the reason is because then if we do get this pullback, it would meet these previous lows really nicely. It could then come back to the 61.8, and obviously we've got this downtrend as well, which is quite nice with the moving averages. So technically, it looks good. I think fundamentally, it's great as well. Obviously, again, feeding into the Australian dollar unwind. So I think all the factors are there. It's more just a case of waiting now. Check UJ July 11, 2024. All right, let's take a look at that then. We'll do daily chart. When was it? July 2024. So 11th is here. What about this? Wait, that's 12th, 11th. Yeah, I don't know. What do you want me to look at here? I'm not really seeing anything. Anyway, okay. So let's do a quick review. The dollar is looking pretty bullish here. Looks like it's about to break out of this resistance, which would be a huge catalyst. So I think if we can see the dollar break above, let's say 101, this would, I think, induce quite significant buying, because the dollar's been stuck in this range for over a year at this point, and it's had no direction. You know, we've had nothing. So if we can break this, I think it would be viewed as a significantly bullish event, and that likely in itself would bring in some buyers. Obviously, on top of the fundamentals and the hawkish Fed and so on and so on. But yeah, I really like the idea of the dollar running higher from this point. Next up, I would expect would be towards sort of 105-ish, sort of towards this, you know, minor resistance level right here. And from there, then probably back up to the previous highs around 110, maybe even towards 114. So we'll see about that. That was an intervention. It might have been an intervention, but it was tiny. You know, if you look at, compare it to the intervention we had here, the intervention that or the move we just looked at on the 11th of July 2024 was really insignificant. So, you know, if that same magnitude happened here, it would very likely bring me maybe slightly, you know, into a lesser drawdown. You know, it wouldn't be enough, I don't think. So we'll see. Okay, right. Let's see what else we've got here. So pound dollar, New Zealand dollar. We've looked at Australian dollar. We've looked at silver. We've looked at, yeah, okay. So I think the plan for euro dollar, for dollar yen, because it's still getting this, still getting a bullish reading. And even if we did get the intervention, I think it would just be a great opportunity to buy low. And I say this all the time, and I never do it. And it's, you know, my own detriment. I leave money on the table by not listening to myself, by just buying these dips on dollar yen. But if we did get another intervention, let's just say hypothetically came down to 200, just like we did here, and what we saw over here as well, I think that would be a really good opportunity to just buy, benefit from the carry trade, and let this market run. What about the Nasdaq? That's a good question. Let's take a look at the Nasdaq. So, sorry, give me 1 second here. Again, I just keep getting some messages that I just need to keep an eye on. Okay, so Nasdaq, I think we are going lower. Now, I think there's a couple of different things going on. So we've got the situation in, what's it called? What's that place called? Iran. No, yes, Iran. We've got the Iran situation. We've got higher inflation expectations. We've got the Fed that's getting hikes priced in. Excuse me. We've got a lot of caution, or what I'm viewing as caution, around SpaceX, their IPO. And we've got the dynamic that investors have been using the stock market, like the S&P, the Nasdaq, semiconductors, so on and so on, as hedges against inflation. But I think we're in a bit of a funny situation, really, because I don't think there's a reason for this market to be doing so well. You know, you can, there is arguments, obviously. You know, semiconductors have been doing great. Nick is very good at explaining the AI and the stock side of it. I'm not so good at that. However, I just don't think this is sustainable. So if we, you know, I'm not a stock guy, so I don't want to go into the SpaceX thing too far because I'm not fully educated on that topic. But everything I've seen is looking like an absolute mess, a total disaster. So, you know, it's not just the, 100 times valuation or something absolutely absurd. It's the fact it's 4 times oversubscribed. They're only giving away 5% of the shares. It's forced into the Mag 7. It's going to be forced into pension funds, so on and so on. It doesn't make money. You know, all their money is coming from Starlink, and I think they make something like 1.2 billion in revenue from Starlink, but then they're spending like 3 billion on other things like obviously the rockets and whatever else it is that SpaceX does. So I just don't think that's a good thing. You know, I don't see an argument for that being positive. So I think there's a bit of caution around that. Then we've obviously got the fact that the Fed's hiking rates, which is normally, or expected to hike rates, I should say, which is obviously normally a negative factor for stocks and indices markets. So yeah, I know that was a very sort of long explanation, probably longer than what you wanted, but I had to get my thoughts out there. So what we've seen was obviously the dip here into the 200 moving average. We had a really nice bounce, but then the 50 came in and acted as dynamic resistance. And what we're seeing now is this 200 acting as a dynamic resistance. And we're starting to see the typical telltale signs of a change of trend. So I'm not selling this. I want to be super clear. I don't really care. I'm not in the market short at the moment because there's no edge finder reading, and especially short in these types of markets. You know, if you look at this, it's extremely difficult to short, really. So I'm not going to do that blindly, especially without the edge finder reading there. So I think the argument to be a short seller makes a lot more sense than being a buyer in the current environment. So from this point, I would expect these previous highs to get hit, you know, provide a break, retest, and then maybe a continuation from that point. And it really depends how everything develops, obviously, from this point sort of down here. We could see a larger correction, maybe not down to 21,000, it's a bit dramatic, but you know what I'm saying? Maybe a further move down, break these highs, and yeah, we'll take it from there. But I don't have a bullish view right now on these markets. What about Nasdaq? Oh, well, that's what we just did. What about Aussie New Zealand? Yeah, Aussie New Zealand, I really liked the short side. So yeah, I'm a little bit of a contrarian view, I suppose. There are still people that are quite bullish on this market for good reason. I think there are still arguments to be a buyer, but I just don't really think the relative strength is there anymore. You know, the Australian dollar was so dominant earlier in the year. I mean, you can see the run it's had. Really, really strong momentum, strong strength, obviously. But the RBA is now on pause. The RBNZ's tilted or pivoted hawkish. So the dynamic that we had with the central banks is flipped. The Australian dollar positioning, institutional positioning, is extremely crowded long, or at least was. I think it still is technically. And now we've reached into a previous level of support on the daily time frame, and we've seen rejections around this level. And we've got, I think it was Credit Agricole that's also in a short position, very similar to mine, actually. You can see the target here. So they're targeting 1.16. So yeah, I think short ideas are quite nice. So more of a mean reversion trade rather than a trend following momentum style. What about gold? Did we not do gold? Oh no, I don't think we did do gold. Let me just very quickly check the schedule so I don't run over my time. Okay, I've got about 6 minutes left, give or take. So we'll take a quick look at gold. Before we do, actually, I want to see what gold is getting on the edge finder. So gold is -3. So economic growth is very bearish. Inflation's bearish. Jobs is bearish. Technicals is bearish. So everything's bearish, really. COT is bullish, but I don't put much weight on COT unless it's in the line, or there's something significantly important, like massive buying or massive selling or whatever it may be. But yeah, it's not overly important in my opinion. So gold is obviously very clearly a bearish market right now. So we've broken below our 200 moving average and maintained lower prices. So the reason that this is quite meaningful, especially on gold, is because this hasn't happened since 2023 over here. That was the last time that we broke below our 200 moving average. And obviously this, when we did do this in 2023, that was the start really of, or yeah, maybe the start or the beginning, whatever you want to call it, of this massive bullish run, this multi-year move to the upside that we saw. This now breaking below the 200 moving average after such a large run is actually a really bearish signal, in my opinion. And the fact we've broken below the daily or the previous daily support level here, you know, the low, I think is a bit of a red flag. So given that the daily RSI here is a little bit oversold, I would fully expect a bit of a correction, retest this 200 moving average as resistance, retest this sort of previous support level as resistance as well, and then continue lower from there. Yeah, I just don't see a world where gold is suddenly going to flip bullish and we're going to continue this bullish rally that we had. I mean, that was reflected on the Edge Finder. It's just a net bearish score, except institutional activity. James, man, I'm so confused if I should book profits on GU and EU shorts. That's a skill issue. I know that sounds really mean. Although the problem is, why are you taking a trade if you don't understand what's going on? So with euro dollar, I'm also short. I'm not even closing this position. It's not even on my mind right now. I have no consideration of closing the trade. And the reason is because I know why I took the trade. So the way to do this really simply, if you don't have the Edge Finder, use code ELITE for a discount, by the way, is when it falls off. So this is the most basic, simple way to manage a trade. And this is probably the easiest way I can give you, other than just giving you technical nonsense. Because obviously the Edge Finder is fundamental data. This is what moves markets, not technicals. So because the euro dollar is bearish, the pound dollar is bearish, the US dollar is bullish, nothing here is saying that pound dollar or euro dollar are going to turn bullish. So that means they're bearish. So if I'm already in short positions, why would I want to close it? Surely, if anything, and I'm not telling you to do this, by the way, but if anything, why would you not want to add? Why would you not want to make the most of the position? So when you are in a trade, you should always know what the catalyst is for you to get out, to move to break even, to do whatever it may be. So in this trade, for example, my catalyst, the reason, or the event, I should say, that would make me move this to break even is if I touch a 1% profit and it breaks this previous low. Okay, that's my rule set for this trade. To fully close it, either it has to reach, let me zoom back up to the daily. Either it has to reach this level here, this daily support, and show rejection. Then I'll close it and look to maybe re-enter if the fundamentals are still bullish. Or I'll just fully close it if it drops off the Edge Finder, and the Edge Finder is now saying the dollar is neutral or bearish even. So it's a case of, if this happens, then I do that. It's all about if and then statements, essentially, if you know, so coding and all that sort of stuff. I don't, but I do know if statements. So yeah, it's super simple. So what does your strategy say? What's your exit criteria? What are your requirements? What do you want from the trade? Why are you in the trade? So on and so on. Do I add to positions? Yes, I do add to positions. So let's take euro dollar again for an example here. Let's say I can't really justify an entry right now, but let's say we do something like this. Let's say we come down to, I don't know, let's say here, for example, and then we start pulling back. Well, what I'll do at that point is draw the fib from the new high, or the previous high, which is here now, to the most recent low, which would then be here. And I'll look to add in at the fib zone. And that's as simple as it goes. So my rule for adding in is basically what I call recycling risk. So rather than having, let's say 1% profits on this trade, 1% risk on this trade, I'm not then going to also go and add in another 1% risk here, because I'm doubling up my risk. So I would have to move this trade to break even. And then, and only then, I can then consider recycling the 1% risk I had here and putting it back into the market here. And even then, you might not want to do a full recycle. You might want to do half of it. So if you risk 1% on this trade, you might want to do 0.5 here, So that's kind of again, I've simplified that massively, but that's the philosophy that I go with when scaling in. It's all a case of maximizing the work and the research, or maximizing the return that you get for the work and the research and preparation and everything else that you've done. But also you need to manage the downside, because, adding to winners, it sounds like a fantastic cheat code to make loads of money. And it kind of is, in simple terms, but you need to be aware of the risk of doing that as well. Okay, what about US oil? I don't have time to go over US oil, unfortunately. I've spent half of this stream just yapping. I apologize. I'm sure Tiger will go through some things with you, though. I need your advice on fundamentals. Recently, I started learning fundamentals. I'm confused where to start, actually. Okay, very quickly. There is lots of free resources. So I think if you go to, let me just double check, actually. I think if you go to A1 Trading's website, you go to resources, you had, actually maybe not, maybe I'm lost, but I'm fairly sure either on the website or on TraderNick's YouTube channel, there is courses for free. I think there's technical and fundamental stuff there. And then you could also just use Google, ChatGPT, very simple way to start. You know, what is monetary policy? What does the central bank do? What are interest rates? How are interest rates impacted by inflation, growth, labor, and all of these things? I know that's probably sound a bit complex, but it is really easy. As long as you know the terms, you can then go and research what those terms mean, how they all relate to each other. And then you're kind of like 60% of the way there. It's all then about how you implement that into trade ideas, because what you don't want to do, I'm very adamant about this, is you don't want to go on academic economics. So the problem is, what you will often see is, well, not often, that's a complete lie, but what you really want to avoid is going too far down the rabbit hole of economics. You don't want to go into the microeconomics of things that have no impact on the charts, because at the end of the day, you need to understand why the markets are moving and where they're likely to move next because of X, Y, and Z. You don't need to understand, you know, how many cars are parked at Walmart. Obviously, that's a completely different thing, but you get what I'm saying. You need to understand the core concepts, and that's kind of it. When you start going down the rabbit hole, you're going to confuse yourself. You're going to get analysis paralysis, and it's just not needed at all, in my opinion. Anyway, guys, I'm going to head off because I've run it over my slot. Tiger is coming to take over the show. Don't go anywhere. Thank you for being here. I'll see you all tomorrow. Stay safe and don't get margin called.
This next segment of the live stream is proudly sponsored by the one and only Ola Prime. Ola Prime is easily one of the most impressive prop firms that I've come across, with an incredibly professional team. They offer fast payouts within 1 hour, up to 95% profit splits. They have the largest number of trading platforms. I mean, just take a look at this list. They have MetaTrader 4, MetaTrader 5, TradeLocker, DXTrade, MatchTrader, and CTrader, all available to their traders. And that's just for the Forex side. On the futures side, they have DX Futures currently, with Tradeovate and NinjaTrader coming soon. Ola Prime has one of the widest selections for challenges and funded accounts that I've come across, with a wide range of account balances you can choose from, like 5 all the way to 200K. And just take a look at the variety of different challenges you can choose from to fit your trading style. They have a 1-step or 2-step pro accounts. They have the 1-step prime, 2-step prime, direct accounts, Ola Prime, 1 challenge. I mean, you have a wide selection here. And the reason this is so important is that you as a trader have a unique style. Everyone does. And finding the right challenge to meet your criteria is very important. If you go through their website, which I encourage you to do so using the link dropped in the live stream chat right now, you can explore in full transparency all of the different account types, all of the rules, etc. They also offer news trading and weekend holding, and they have direct and challenge accounts available. For a limited time, stream viewers get extra discounts using the promo code that you see on your screen right now, and also through the link and promo code being shared in the live stream chat. Take your trading to the next level with Ola Prime. Now back to the live stream.
I'm sorry, guys. I totally just realized my sound was off. Hope that's better. I'm a ding dong. Hey, it's been a long time since I've done that, though, right? As I was saying, hope you're having a wonderful Thursday. Hope you guys enjoyed the excitement we had out of the headlines this morning that came out literally right when PPI was being released. President Trump obviously talking about the bombs being thrown back in retaliation for the Apache helicopter getting down. And it was quite a miraculous story on that Apache helicopter. There was a bomb that got sent into the cockpit, basically in the pilot's laps, but it did not detonate. So you talk about counting your lucky stars. I'm sure they were pretty happy about that, but that had to scare the daylights out of them. Anyway, that's all over with. Retaliation's going on. Trump's threatening to take Carg Island now, to take control of their oil. So that's kind of the quick way to sum all that up. Sounds perfect. Okay, thanks, gamer. Appreciate that. But again, that came out right when the PPI data was being released. So just a double whammy all at once. And then, of course, looking at that PPI data that just mentioned, we did have the core number, which is obviously the number minus the volatile food and electric sectors, okay, which is the one that, from what it sounds like, the Fed tends to lean towards a little more when it comes to writing policy and those kinds of things, rate hikes, rate decreases, things of that nature. So that came in a little soft, and obviously the headline number was 0.4 higher for the month-over-month number. Now the full number ended up coming out about 0.1% higher. So if we go to the economic data for the U.S. over here, take a look at the PPI data. This is, of course, the year-over-year number, and we were a 0.1% higher on the PPI. So, of course, good for the currency, bad for stocks, bad for our pocketbooks, and bad for things like oil. I know somebody had mentioned oil there towards the end of James' segment. I was taking a look at oil, and for me, oil still pretty well neutral. I mean, the bullish, bearish narrative is just straight up neutral. It's a -1, I do believe was the score. Let's go double check that. Yeah, -1. So it's just been kind of hanging out here in no man's land for a while. Last time we had a rating was back on, was at the 1st of June. We had a little bit of a bearish reading for a short while there. But the inflation has just kind of went against oil. Or I should say, it's one item that is not in favor of oil. So it's actually bearish. You got a lot of bullish items up here as well. So again, you just have offsetting data kind of squeezing itself, and it's showing, in my opinion, in the price action. Again, we've got these series of lower highs while we also have higher lows. So it's kind of creating that coil action. And at some point, it's probably going to spew out one side or the other. We just don't know yet, because we keep getting strikes. We keep getting positive headlines only to turn around and get them negated or talked down. So I don't have a play at all. This is just too much in the middle for me. That's diddle in the middle territory. So just be careful with oil unless we finally figure out if we're going to go above that top line or go below that bottom line. It's kind of the way I see it. But so, yeah, I think there's a lot more better things to be trading than oil right now, according to my trading style, guys. Again, I do daily 4-hour supply and demand, as you guys all well know. So definitely off my list. Gold, silver. I know we kind of touched on that a little bit yesterday. Yeah, it's really just the COT. It's really just the sentiment analysis side of things keeping me from selling this or from shorting this, because everything else is pointing pretty bearish. So I love the fundamentals to the downside. Love the technicals. I mean, especially right here on gold, you can see we did finally break this structure point. I don't think it was broken yesterday when I was on live, but we did finally break and close at the end of yesterday's crossover or intraday session for FX. So yeah, technically this thing's going down. I mean, it's no question about it, but is it overstretched? Who knows? So I'm basically waiting to see what tomorrow brings as far as the COT report. That'll go a long ways into helping me decide for Sunday, Monday, if that might be a possibility to short. Because remember, it was increased by about 6%, if I think that was the number. Taking a look at that from the banks and institutions. Yeah, 6%. So it's given bullish narratives here. And also the average retail trader at home on their computer, their smartphone, they're net short. So again, we can't utilize that as a contrarian signal in this case, because they're short. They're on the right side they're on the right side at the moment. That's not the side we want to see. So I will be interested, though, to see if we changed it all on the put call ratio for gold. So go get that popped up. Guys, let me know in the chat if you have any specific tickers, anything you'd like me to bump to the front of the list. Okay, so yeah, as far as the high put volume, still there for gold. So it's still a bullish signal if you're looking at it from this point of view. We did have a little bit of retrace from the options traders messing around with this stuff, but overall still high put volume. So just be careful with trying to follow the fundamentals. Be careful with the technicals, because so far the sentiment is just still not helping us out. Okay, so but yeah, in my old days I'd have done been short. I'd have done been trying to find a place to short. But again, you learn things over the course of 12 and a half years, which is basically where I'm at in my journey at this point. And I've learned to follow the sentiment thanks to Nick. Big thanks to Nick on that. As far as the top setups go, let's go pop on over here and see what we got. Not a whole lot has really changed since yesterday, although silver has jumped onto our list. Okay, so silver's giving us a little better look. But again, and I know I've told you guys this before, me personally, if I'm getting a bearish bias like we are on silver overall, that just personally for me makes me hesitate just a little bit because, again, the banks did increase their silver holdings last week as well. It wasn't as great as the gold, not at all. Because gold was 6%. Silver was only 1.5%, I think it was. Yeah, 1.5% right here. And it's still, and I still kind of look at that overall personally as neutral anyway. I think I've told you guys, if it's between that -2 to +2 range, like silver is, I kind of look at that as a little on the neutral side. So I would probably be a little okay with going against the overall COT in this example, just because everything else is looking pretty decent. And again, it didn't like the inflation. Talking about gold and silver. So take a look at silver. We are still yet to break and close below this March 23 low point. So me personally, I would want to see that first. This is the daily chart over here. This is our 4-hour here on the left. Just to show that we have had a lot of money breaking a structure. Remember, it takes a lot of money to break a structure. To break a structure, a demand supply zone, support resistance line, swing low, swing high. Okay. So that will go a long ways into helping me want to personally short this, is if we can finally break and close below this. Okay. Day's young. Who knows? Maybe we'll get that by the end of the day. Currently at about $64 on the dot. We're chewing through this was it a 4-hour I had over here? 4-hour, 2-hour, something like that. Demand zone over here. So we did break and close below it. So that's a good sign. Maybe that would work. That might work. I've got an alert set up here. We do have a new zone that was kind of created on the daily side, but I don't like the fact that the gap is tiny. So that's kind of the one thing holding me back, just looking at the big picture, is the fact that our gap, our acceleration gap to the downside, it wasn't giant. It wasn't big at all, but it's still based right here, and it still did break that structure. So I don't know. Just kind of in the middle with this. I think the higher probability would be if we get a retracement back to like the 72 half level. But yeah, this is just a weird spot. There's some gray area here for me, just looking at this thing on the daily. And you can't deny the gap over here on this from this supply zone is much stronger, right? You guys can see that a mile away. So that's our acceleration gap on this supply zone. And then this down here, I have to zoom in just to move it across. So it's just a little on the weaker side. That's the daily. Now the 4-hour picture looks a little different. 4-hour picture looks a little better. Let's draw that up. Let's get that drawn up. So here would be our 4-hour supply from this the top of the daily. Okay. Remember, I have to have multiple sets of eyeballs. Daily set of eyeballs, 4-hour set of eyeballs. So that might be a possibility if I'm just looking at the 4-hour side, but yeah, it's just the lack of gap, guys. That's really the only downfall for me. But I'm very, very, very picky on these zones. Again, you study something for 12.5 years, you find the little nuances that either make or break something. And that's just a picture I just don't like. And it's a low on the curve as well. Higher on the curve is probably the higher probability spot. Okay. And I'm splitting hairs at this point. And I know, I get it. But again, you get burnt on certain things enough and you just kind of avoid it. So I'll keep an eye on it anyway, this zone up here, I'll keep an eye on this one, but I've got my alert set at the 7280 level. That's kind of what I'm looking at. So, but yeah, that's silver. Still got to retrace a little ways, but it is what it is. Having a look at some of the main currency pairs, the dollar-based pairs, since that's typically or mostly what's on the list over here: dollar yen, euro dollar, Aussie dollar, Kiwi dollar, pound dollar. Okay, we just lost the dollar CAD, and dollar Swiss never was on the list to begin with. So dollar yen, remember the yen itself is quite a strong currency fundamentally. So I just don't know that I want to get involved with two very strong currencies. It's not like the yen is one of the lowest performing fundamental currencies, right? If that were the case, this would be a no-brainer. That's also partially why we're just getting a +6, because again, the yen is strong, and this is telling us to sell the yen, right? So I don't know. I just think some of these pairs down here where the US dollar is the quote currency probably be a little more likely. Pound dollar, Kiwi dollar among them. So let's take a look at pound dollar and Kiwi dollar, see what we got. See if we got any changes from yesterday. Now we're still fighting that swing low that we had back on May 18th. We've already kind of bounced in this 4-hour demand. We got that push back up. We're retracing. So here's the thing. When it comes to pound dollar, if we can break that structure and close, that'll go a lot. That'll make me a lot more happier to attack some of these supply zones. You guys know that I kind of drew this up last day or so. Got this 2-hour supply up here, which is basically that pre-NFP price point that I'm still keeping my eyes on. And if price doesn't break structure, I would still look to trade it. Just might be a little more careful on the risk. But ultimately, and I'll just go to a full chart or a 1-chart view so it's easier to see for you guys. Ultimately, I think I would prefer to see price, now that it's already down here again, just break below this structure, retrace like that. That would probably be the higher probability, just because now we're showing that we can actually break this structure, this demand, okay, where I took my profits on the Sunday trade that I closed out. Because at this point, we're just kind of flailing about trying to figure life out. So break a structure, that'll go a long ways into making this a little more simpler of a call for this short up here, in my opinion. That's just my opinion. That's the beauty about trading. That's what makes a market, is everybody has their opinion. Everybody, there's a buyer, there's a seller at every price point. Okay, some think it's going up, some think it's going down. That's what makes a market. That's the beautiful thing. We have all kinds of different ways of trading. Even the guys on the show, right? We all have the same general idea, but it's just how do we get there? It's just slightly different for all of us. So, when we show you our strategies and how we trade, you don't have to like everything I do or they do. Just pick and choose what you think makes sense to you, and just add it to your repertoire. That's the whole point of having multiple traders on here to show you guys live. Okay, no one strategy is perfect. So mix and match, right? That's the beauty of it. So, let's see, what else have we got? So that was pound dollar. Okay. Wanted to also take a look at the Kiwi dollar, since that's down there with the pound dollar. We are starting to break this structure to the downside. So that's a good look. We obviously, this supply zone confluence, remember, is kind of, and maybe this has been enough time to kind of separate it with all this clean space here in the middle. Perhaps maybe that's enough time to kind of reset itself. But I just personally want to be aware of this consolidation over here. If we go to a daily, it'll look a little better. Remember, we got this former daily consolidation or equilibrium, fair market value area. And then we had one over similar. So again, you pull them all forward, this one over here. This supply zone is in the middle of it, right? That's the magnet point. That's where buyers and sellers agreed on price for those particular candles that are in the boxes. I just don't know that I want to have anything to do with it. So I think I stick by my plan to wait for this supply up here, this supply zone confluence, the daily 4-hour. But I do have my alert there, because again, if I get a bearish engulfing candle with a lot of volume spread analysis activity taking place, then perhaps I'll just drop the risk and maybe take a stab at that 58.70 area, which is where that alert's set. But if I don't see an absolute perfect picture, I'm ignoring it. And then we have an easy take profit because it's down here, the daily demand. Okay. Take profit just ahead of that. We could obviously break it down further on a 4-hour, see what it looks like down there. So there's really a couple options to this. But I like the fact that we've started breaking these structures, because it shows that there is some underlying strength somewhere in this bearish impulse leg, connecting all these candles down here, breaking the structure points over here. So yeah, that's kind of my look on there. Still sitting on my hands with Kiwi dollar there. Aussie dollar, Euro dollar, still giving us some nice bearish looks as well. Getting closer to this demand zone confluence that we have down here. So I think I drew this up this morning, but at this point, since Aussie dollars dropped away from these alerts I've got set up here, perhaps we could utilize the demand zone confluence, kind of like Artemis, slingshotting around the Earth, guys, or slingshotting around the moon to get into orbit on its way back to whichever planet it's going for. Kind of like use this demand zone confluence as a spring to push price back up into this supply zone. If this supply zone works, great. This is another one where it's lower risk for me personally if I were to short here. But the highest probability is the true origin of that strong move down. So that's kind of what I'm looking to see. Can all this confluence of demand zones, which by the way is a weekly, daily, 4-hour. Okay, weekly. Remember, weekly is stronger than a daily, right? Daily is stronger than a 4-hour. Monthly, obviously, is stronger than a weekly. Perhaps that is, and this is a similar picture to what we're looking at on Bitcoin right now. Remember, I went through yesterday the monthly, weekly, daily confluence that we saw, the bounce from back in, what was that, early May, I think it was. This is kind of a similar situation, except this is weekly, daily, 4-hour. Okay, so it's just a little weaker than that monthly, weekly, daily, but it's still strong nevertheless because we got that weekly confluence. So that's my plan on Aussie dollar. If all this happens, come down, bounce off the confluences, push price up because the fundamentals and everything are pointing bearish. Okay? And perhaps this could be an opportunity to buy to sell, right? Because at the end of the day, if we scroll out, we got a little bit of an uptrend depending on some of these higher time frames that we look at. There's a weekly. There's our weekly demand I just mentioned. So could this be a spot where we buy and go against Edge Finder in order to push price up to the true sell point? I don't know. It's something worth considering. But at the end of the day, it's kind of hard to go against a bearish -7. Okay, when the fundamentals, when especially the jobs market numbers are pointing bearish, and the COT as well. Okay, the COT favored the dollar over the Aussie this past week, and then trend. So, I'm not saying I'll do that and partly because it's such a higher time frame. If this same picture were on a 15-minute time frame, I think that'd probably be a little different story to buy to sell. Okay, and I know Nick has talked about that concept a time or two. I do believe I've heard him talk about that. So. But now that we're looking at this on the higher time frame, I don't know if I want to fight that because now we're talking hundreds of pips. If I do a measuring tool from here to here, that's almost 300 pips, guys. Even if we go to that middle zone, that's 170 pips. Yeah, that might be too many pips to buy to turn around and sell in the true premium areas. Okay, so yeah. Now that I think about that as I'm speaking to you, I'll probably avoid that. But there's no denying, again, when you look at this thing on a weekly chart, it's clear to see that that's an uptrend, and even on the daily. Okay? We're getting downtrend now, but is this just nothing more than a pullback on the higher time frame to bounce in, collect unfilled orders, and push up? I don't know. Need more information, ladies and gents. I'll see what happens with price. If price continues down, bounces in. We also have the benefit of knowing we got a former support resistance line going right through the heart of that zone structure up here, that blue dash line you see somewhere back in time. There you go. Swing high back on, looks like the end of September of 2024. So just something to keep in mind. Got a 200 EMA on this daily time frame coming up through the zones as well. Could possibly give us a little bit of a lift. But if it just dilly-dallies around here, no thanks. It'd have to drop in pretty quick. I don't know. We'll see. What about euro dollar? What about Euro New Zealand, Diane? Yeah, let's check that out. Pentagon has been locked down, says Alan. Hazmat teams are responding. Oh, boy. Oh, boy. I'm sure that'll be showing up all over Financial Juice, huh? Yep, here we go. This is what Alan's talking about. The Pentagon has been locked down. Look at that. Hazmat teams responding. Oh, boy. Somebody's not too happy. See, we come into the day thinking, oh, it's a PPI day. We'll just focus on PPI. But then these headlines hit. Right? The headlines hit. You get Trump posting this over here, talking about taking Carg Island, other oil infrastructure points, literally right when PPI came out. That was literally about the same time, 7:22 a.m. my time. That's Central Time, by the way. So that would have been, 8 minutes before the number dropped. And did anybody even remember we had a euro number come out? Okay, the main financing rate, they did raise 25 basis points, so you got that as well. Guys, that's just a lot all at once. It's hard to decipher all that at once. So at the end of the day, we just got to let it play itself out. Okay, I've even got a chart over here just taking a look at I've got just the dollar-based pairs over here right now, but just to try to take a look at all these assets at once. Which, by the way, is a really cool feature when you upgrade your trading view. I actually went up to the to the $60 a month package so that I could get the volume footprint, so I can go on the microscopic level within zones to take a look at liquidity. But it comes with the ability for you to put 8 chart view up and do all kinds of cool stuff. So yeah, just another. I'm not affiliated with them, but it's a little pricey, but it helps. It helps with a lot of stuff, especially when it comes to content creation. Okay, euro dollar. So we are currently trying to decide if we want to chew through this daily demand. I think I pointed out to you guys yesterday. I personally have no interest in shorting because, number one, I think a big part of the move's already been made. We're down now into more of a discount area, despite the bearish reading. There's still, believe it or not, another mitigated zone of demand over here. I just didn't draw it up because it's already been mitigated, and it didn't even break this structure here. So, but you can't ignore the fact that there's still possible liquidity in here that could take a trade and take away your unrealized gains. So going down to a 4-hour chart, digging in that a little deeper, you can see the 4-hour demand I drew up within. So kind of, I'm just being a little cautious about these zones down here. I'd like to short euro dollar, but again, I just think it's a little too close for comfort. Just basically similar. Again, it's a similar picture with all these dollar-based pairs. Need a retracement much higher up. Either this supply zone, which I think is probably the weaker one, or this supply zone clear up here, which is about well over 100 pips away for possible shorts. So yeah, again, guys, just basically just been continuing to sit on my hands this week. My hands are getting nice and flat because nothing is where I need it. Now let's take a look at silver once again, since I did pop on the list. I went over gold earlier, but I didn't go over silver. and it's, yeah, well, I guess I did kind of go through it already. Yeah, we'll keep an eye on this zone, guys. Yeah, that's 72, 78. That's basically what I'm keeping my eyes on. That's going to be and that might be too small of a time frame at this point. I guess that is a 30-minute zone with no real higher time frame confluences. So that might even be out of the picture, guys. Down here, if we go a little deeper into this zone I drew up here on the 4-hour, looks like we are getting a pretty decent bout of volume spread analysis on the leg out candle that broke structure. So this might offer us an opportunity. Talking about this, and I just dropped it to a 1-hour. Although I don't really like the 1-hour picture, but I do like the volume coming out of it. Okay, the legs out, the breaks of structure over here, and the fact that obviously the underneath demand zone did stop it in its tracks, but it kept continuing and finally broke and closed. So I think there's probably going to be some pretty decent strength right here in this area, again, on the 4-hour. So here's what I'm going to do. I'm actually going to steal this alert. I'm actually going to move it right here. Because, again, we did get a break and close, just going back to the 1-hour. Okay, we did chew in. There were some unfilled orders down here, but we didn't get an immediate liftoff. So that tells me we've probably got some pretty decent underlying strength right here. So, and again, we broke and we closed below it. So yeah, I'm definitely going to keep an eye on this zone right here, guys. So, again, silver just popped on the list, like within the last 30 minutes or hour or something like that. After all the PPI data come out. Again, it doesn't like it. Gold, silver. Didn't like the higher inflation number. So that's probably going to be the main item I watch over the next day or two. I'm going to move the zone out of the way now that we know it's been touched. And yeah, we'll see if that can offer up a little trading opportunity. And this would be, to me, a little bit smaller time frame because, again, I don't have a daily. I don't really think I have a very good. I have a daily, but again, it just comes back to that gap. It's just a little too skinny for me. So I'm gonna focus on the 4-hour time frame and then a smaller time frame for confluence. So there's a 1 hour, 30 minutes, probably going to give us an okay. What about 15 minute? Okay, 15 minute. So when we look at the 15 minute, it's a very skinny bodied candle with a big, lovely wick up top. So that would be my confluence. I'm just going to put a line at the bottom of that. And I'm going to actually move my alert on that line. So 4 hour, 15 minute confluence. It's a little bit funky of a time frame combination, but hey, it is what it is. I'll focus on that. Ladies and gents, that's about all I got. Euro Aussie. Oh yeah, you said Euro New Zealand. Let me take a super fast look at that. Sorry. Euro New Zealand. Here, I'll just do this 30,000 foot view. Alligator's mouth is opening to the top. But our action time frame is pointing down. So to me, they're not matching up. They're not marrying up. This is focusing a little bit more on higher time or on a push up. Moving averages, again, are opening to the upside. We've obviously peaked through this spot. I think there's probably better options than Euro Kiwi. And then just to finish real quick on Euro Aussie, I don't want James to get mad at me for overshooting the runway. Euro Aussie, we do have a move up with the moving averages, breaks the structures. Same thing. Oh, no. Okay. All right. So this is pointing up a little better. Okay. Just looking at the technicals, there is a daily zone here. And over here in this daily area, we have a mitigated 4 hour demand. So there's just no real picture there. You're also bouncing into this overhead supply. So this could cause problems. Former support line as well. Be careful. Guys, it's slim pickings. I'll end it on that. It's just way too slim pickings for me for anything. And not to mention the headlines coming out with the PPI. And then there's the Euro financing rate statement to think about as well. Sorry, I couldn't be a bigger help today. It's just not a whole lot of anything. I don't like trading today. I don't like it. I don't like it at all. And it's okay to sit back and relax, read a book, watch some webinars, watch some of Nick's material. Somebody had asked about where to start on fundamentals. Go check out Nick's playlist on this YouTube page. He's got some really good stuff, really good playlists on the fundamentals, just to give you a basic understanding of it. We don't have to be like wizards on it. We just have to understand the basics of the fundies. We'll talk more about that tomorrow, guys. Hey, have a good day. Stay safe, and we'll be back tomorrow.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. From all of us at A1 Trading, have a great day, and we'll see you next time.